Welcome to our 139th weekly webcast. Now, the way that this call works is I first discuss the most important and interesting business news topics from the past week and how we can all use the news to enhance our careers or invest much better. Then what I do is I spend the rest of the 3-hour call taking your questions, and I'll give away one of my $999 MBA degree products to one person on this call. And what I'll do is I'll explain how you can win this very, very soon. Now, over the past 139 weekly webcasts and the many MBA office hours and MBA Q&A sessions I've had, I've answered over 10,000 questions live on YouTube. And it's been a lot of fun. And I thought it would be awesome if I could share with you all exactly how you can type questions to me and get immediate video answers. And so I want to introduce you to a new free product of mine called Power Search. Now, the way that Power Search works is at the top of my website, you can type in any question you possibly have. So, for example, if you want to type something about stocks or how to value stocks, you can type here, how to value stocks, and hit enter, and you'll get access to a gazillion answers I've given on how to value stocks. And if you click here, you'll get access to where I talked about these topics in my MBA degree and my other courses. And here's just other links on my website to get access to answers about how to pick stocks, for example. Okay, cool. So we're pretty excited about that. And Matt Lacousse, my great Chief Creative Officer, did an outstanding job putting that together as well. Thank you. All right, let's now talk about the news. How do professional investors make money when they invest in stores and restaurants like McDonald's, ticker MCD, as McDonald's and many companies are starting to open post-COVID? And when is In-N-Out Burger going to go public? So what we're going to do is we're going to do a very fun live case study here on McDonald's and on In-N-Out Burger. And both companies were actually founded around the exact same year, and both have completely different trajectories, as one of them is a public company, McDonald's of course, and the other is not yet, In-N-Out. So in this short case study, what we're going to do is we're going to learn about investment banking. We'll also learn about fascinating global economics and how to do investment research, as well as growth versus value investing. I'll explain all this in a second. You'll love it. Now, as with all investments, we need to find the primary driver that makes a stock go up or down. Now, in the retail sector and the restaurant sector, it's called same-store sales. And it's crucial to monitor how much each individual store's sales are growing year over year, meaning the growth in same-store sales. Why? Well, because if we just looked at total revenue each year for the entire retail company, then investors might be investing in companies that are opening too many stores at the same time, or making too many acquisitions, or basically taking on too much debt. And so what we always do is we look at what's called organic growth, meaning the growth of each store. Now, let's talk about McDonald's, ticker MCD, as an example, which has grown faster over the years than In-N-Out has, because McDonald's, as with all publicly traded companies, is under extreme pressure to grow or the stock will fall. Now, investment bankers did the McDonald's IPO way back in 1965, and McDonald's was then considered a growth stock, meaning investors that don't care as much about near-term earnings bought the stock and they absolutely loved it. And growth investors want the company to spend a lot of money on growing revenue today, and they worry about massive profitability in the future. It's just the way that growth investors work. Now, when growth slows, what happens is value investors buy the stock, and they demand that expenses are cut. And in order to grow same-store sales, when McDonald's was still classified as a growth stock, McDonald's introduced the Big Mac in 1968, then the Egg McMuffin in 1975, then McNuggets in 1983, I'm getting hungry, and then coffee in 1993, and then breakfast all day long in 2015. Now, what movie is this from? Can somebody please get this kid a Happy Meal? The company then introduced delivery through Uber Eats in 2017, which has done incredibly well over the past year because of COVID, of course. Now we understand why at McDonald's they say, would you like fries with that or a Coke with that? Investors care most about, the increase in same-store sales. And there's tremendous pressure on publicly traded companies to grow, which is why McDonald's has introduced many, many more products over the past couple decades than privately held In-N-Out Burger has. And I'll talk about In-N-Out Burger very, very soon. McDonald's even makes plastic chairs that you sit on that feel uncomfortable after 20 minutes on purpose. All their chairs are like that, not just this funny one here. But they do that on purpose. They make the chairs uncomfortable in order to increase store traffic and, of course, boost same-store sales. It's all about same-store sales. Now, once revenue growth per store has slowed down for McDonald's, what happened was growth investors sold the stock and value investors who like to buy cheap stocks bought the stock. And then, as a result, management's been under a lot of pressure from value investors to materially cut expenses as a way to make the stock cheaper. Remember, value investors like buying cheaper stocks. Now, over the next decade, I think what we're going to see is that the number of employees per store at McDonald's is going to drop materially as you can use, ATM-like kiosks to place your orders. And I've seen these much more in Europe than I have in the United States. Now, we're also going to see much more coffee being sold at McDonald's as well, which investors love because the profit margins on beverages are very, very high. Now we understand why publicly traded retail companies keep trying to sell more products at each store as a way to increase same-store sales. And for example, Costco, which is ticker COST, Costco keeps adding products to its store. And I always joke that if you can't buy it at Costco, then you don't need it. And I actually took this picture at Costco. These are my kids. Yes, you can actually buy these things at Costco. You can buy kids at Costco. I mean, bears, yeah. Isn't that crazy? They sell those things there. It's kind of fun, though. That's how I feed my kids. We go to Costco, and then you can walk around and they give you free samples. Kidding, sort of. Okay. Now, retail stores like Walmart, ticker WMT, and Target, ticker TGT, they're so hard to compete with, as is Amazon, of course. And so what happens in the United States is there's a massive shopping day in late November every single year, and it's called Black Friday. Because most retail stores that compete with Walmart are in the red all year long, meaning they're losing money. And then what happens is they break even or go into the black around late November, meaning Black Friday. It's so hard to make money in retail, and profit margins are so small, sometimes 1%, 2%, or 3%, which is what credit card companies actually charge retail companies. And this is why retail companies will accept many cryptocurrencies in the future as payments soon, because with cryptocurrencies, you don't pay the nutty high credit card fees of 1%, 2%, or 3%. It's coming. So how do we do investment research on publicly traded companies like McDonald's? Well, the first thing we do is we visit sec.gov. And let me go there with you. So let's go here. sec.gov. This is an American website for the Securities and Exchange Commission. Then you click up here, more search options, and then you enter in the ticker symbol, in this case MCD, for McDonald's, and then click Find Companies. And then you read these filings here. Now, you want to pay especially close attention to what's called the 10K. The 10K is the annual report, okay? And the 10K comes out every year, of course. And you can go back over 20 years worth of 10Ks and read them here from McDonald's. And in the 10K, what you'll find is you'll find all of the risks for the company as well as the background on the company and much, much more. Now, the second thing we do, and there's many more steps, but I'll only cover a couple today. The second thing we do when we do investment research on a company is we always go to the investor relations website for that company. Because every big company has their own internal department, and sometimes they outsource it. And their job at investor relations at that department is to educate investors, all investors, doesn't matter how big or small you are, on the stock. So do a search for investor relations, McDonald's. And you can even sign up to get emails from McDonald's whenever there's a news release. And you have the same access that the big investors do here as well. So you can read the press releases here. Every time they do a webcast or a conference at a hotel in New York City for investors, you get access as well. We all get access by law. And I'll talk about why in a minute or so. But right here, you can sign up for investor updates if you wanted to. Now, since 2002, through what is called Regulation FD, meaning fair disclosure, every investor on the planet now has access to the same information that large mutual funds and hedge funds do at the same time. So you can outperform mutual funds and hedge funds too if you do the work. I firmly believe that. In fact, since 2002, this is fascinating, mutual fund performance has been awful because of this. And 90% of mutual funds underperform lower cost ETFs and major indexes like the S&P. And if you want more information on why mutual funds are a scam, just go to my website, harounventures.com, and at the top, do a search on mutual funds, and you'll see a video on that. So how do we do even more investment research on companies than the big investors do, and how do we outperform them? Well, based on my career working at Goldman Sachs and at the top hedge funds, I created my own 100-step investment research spreadsheet, which I make available to my MBA degree students so they profit from doing deep due diligence on investing in companies like McDonald's and any other company. Let me show you that very quickly and then we'll move on. So right here, and it's tough to see, it's small, but this is a spreadsheet with 100 steps on how to analyze companies. And the way I've set this up is I ask you many questions based on qualitative research processes, right? Many questions here. Then I ask you quantitative questions, and then financial research questions and whatnot. And all this stuff, it feeds into this dashboard here with this dummy data for Apple here to tell you more information about that company. And you also, out of this, get a one-page report, which is similar to the one-pagers you see in my other courses. However, you also get a 150-page detailed report as well. And so this covers everything there is to know about a company when you do investment research. Again, I make it available to my MBA degree students. Okay. Before we chat about investment banking and In-N-Out Burger, which is fun, let's talk about global economics and McDonald's. Because there's a company called The Economist. It's a magazine, and I can't read anymore because the words are too small. But what they do at The Economist is they use a fascinating concept called the Big Mac Index. And McDonald's doesn't charge the same price for Big Macs in every country. And if we analyze the prices paid globally for Big Macs in every country, then we can understand what currencies should be valued at and how much money gets you in different countries when it comes to burger economics. So this is not a perfect science, but it's a heck of a lot of fun to look at. So what we're going to do is we're going to search together for Economist and the Big Mac Index. So let's go over here. Economist, Big Mac Index. Here we go. Here it is. And what you can do is you select your base currency, US dollar in this case, but select euro, pound, whatever other currency you want to. And then you can find out whether or not the economist thinks certain certain currencies are overvalued or undervalued. Doesn't work for cryptos yet. And so here, if you select the United States, you'll see a Big Mac costs $5.66 in the United States. It's crazy, eh? And 3.29 pounds. You can select any other currency. In McDonald's, it costs you $6.48. In the US, a lot less, that sort of thing. So check this out. This is a lot of fun. Again, it's not a perfect science, but it's fun to look at. Okay. Let's now talk about this amazing fast food chain that some of you have heard of in the US called In-N-Out Burger. And In-N-Out Burger was founded around the same time that McDonald's was founded in 1948. So why is In-N-Out Burger so small compared to McDonald's? Well, it's because it's privately held. And investment bankers constantly call In-N-Out Burger about doing an IPO. And it would be the most massive restaurant IPO in decades. It's one of the reasons that In-N-Out is small compared to McDonald's is because they are private. Because when a company goes public, what happens is the investment bankers sell what are called primary, meaning new shares, and the investment bankers sell secondary shares, meaning private investors and employees get a boost in their wealth by selling shares in the IPO. And companies that go public can raise a fortune in terms of making new primary shares to sell to the market through what are called use of proceeds. And they use the use of proceeds to make the company grow fast and open many stores, most likely overseas if it's a restaurant company, like Chipotle did, ticker CMG. Now, if Shake Shack is valued at an insanely high price to earnings multiple, I guarantee you that In-N-Out would be valued at a much, much higher multiple if it were publicly traded. Because In-N-Out could one day have more stores than McDonald's, that's right. But of course, they need to go public first. Now, there's much more customer loyalty for In-N-Out than you see at any other restaurant company in the world. Yet, most of the restaurants are here in California. And there's a fascinating secret menu at In-N-Out as well. And when I go there, I order off of the secret menu, which is not listed. It's brilliant marketing on their part. I get this protein burger, which has lettuce instead of bread, as I've been on this keto diet for 20 years or so. Now, the unbelievable thing about In-N-Out Burger is that they only have just over 10 items on their menu, versus McDonald's, which has close to 100 items on their menu, yet the same store sales of In-N-Out Burger are twice as high as they are for McDonald's. It's unbelievable. It's a mystery, as the company has a cult-like following and employees there make way more money than they make at McDonald's. And the profit margins per store for In-N-Out are twice as high as even Chipotle's, ticker CMG, for Chipotle Mexican Grill. Now, the family that owns In-N-Out has been plagued with personal disasters like the Kennedy family has, and my heart goes out to them. The family's lost family members to drugs, an airplane crash, motorcycle crash, and much, much more. And the woman that owns almost all of In-N-Out is awesome. Her name is Lindsay Snyder, and she's not even 40 years old. And she's worth $3 billion, and her net worth could go up literally 10 times if she took the company public. However, it's not just about the money. It's about 1950s style wholesomeness and faith. Now, Lindsay had drug, alcohol, and many relationship issues, and faith actually saved her. And I humbly believe that we all deserve a second chance, and that the past does not equal the future. And in addition to having Bible passages tattooed on her, if you look at the bottom of an In-N-Out fries container or a drink container, you see references to Bible passages. And perhaps if she took her company public, investors wouldn't tolerate that. You know, kind of like if I ever accepted investors for my company, which I will never do. But I might not be able to express my love for God, and I might not be able to tell my students not to worry about their career stumbles because God already knows what's going to happen. Now, for In-N-Out, it's about wholesomeness and returning to an age of simplicity, hence their menu. Now, Lindsay Snyder is the polar opposite of Ray Kroc from McDonald's from an ethical, that's right, and wholesomeness perspective. And instead of selling her soul or company in the interest of making more money, she has a higher purpose in her life. And I love her for that. And her father passed away tragically. And she said this about her father. When he was sober, he was the best dad in the world. We had our time cut short. And so building a business should not just be about making money. There is a higher purpose, like Lindsay has. And Lindsay said, we all deserve a second chance. And she also said, the things that I've been through forced me to be stronger. And when you persevere, you end up developing more strength. I love that. And I think that if you think with your heart in business first, your mind often follows, as do the profits. So when it comes to same-store sales, instead of asking, do you want Coke and fries with that? In-N-Out thinks, do you want faith and hope with that? All right, give me 1 second here. I want to take a little sip of water before moving on to Kanye. All right, this will be fun. Let's talk about 9 business lessons from billionaire Kanye West. Number 1, be different. You are the brand. The brand of you can't be like anybody else because nobody makes it big by being like somebody else. There's only one Bob Dylan, there's only one Adele, there's only one Kanye West, and there's only one you. So be yourself as everybody else is taken, and only then will you reach your full potential in life. And when you do something radically different in your life, people are going to think you're crazy. Then you get a little bit of success and they call you a crazy genius. Then you put your dent in the universe and get mega success and they just call you a genius. Not that their opinions matter, because as Steve Jobs once said, those who think they are crazy enough to change the world are often the ones that do. The second business lesson from Kanye West is confidence. And part of the brilliance and misunderstood genius of Kanye West is his confidence in himself. And I applaud his late mother. God bless her for instilling a sense of confidence in him. Great teachers and great parents instill confidence in their students and children. It's crucial. And Kanye West inspires so many people with his constant message in his music of make your own decisions. Don't let society tell you that this is what you have to do. And that don't kill you can only make you stronger. And great athletes actually have confidence. And this is why they succeed often in business. And also in the hedge fund industry, I remember when I worked there, managers would always say, I want to hire the best athlete, because athletes are confident. And if you have confidence when you invest in the stock market, you won't basically be a tourist in stocks or rent them. You won't sell them because everybody else is. You'll have the chutzpah to kind of stick it out longer term, like a pit bull on a pork chop. Now, years ago, a young Tiger Woods was drinking underage in a club in Las Vegas with Michael Jordan. And Tiger Woods said to Michael Jordan, how do you talk to women? What do I need to say? And then Michael Jordan looked at him and said, you tell him you're Tiger Woods. And so be you. You don't need to tell the world about how awesome you are, but you have to humbly think that. You do. It's not just about confidence, though. It's also Kanye's attitude about life events, which brings us to number 3, attitude about life events. Now, Kanye believes that life happens for him and not to him. And this actually helps to shape his business brilliance. Just like John D. Rockefeller, Kanye West believes that things happen to him for a reason, which guides him down a different path in life. He thinks differently for sure. And he actually, it's tragic, but he almost got into a life-ending car crash in 2002. It was a head-on collision. And he broke his jaw, and he had it wired shut. And he actually recorded a song while his jaw was wired shut, which did incredibly well. And so he's motivated to overcome the odds. And he saw that accident as a turning point in his life. And I humbly think that if we eliminate self-pity and we see some events in our life within reason as guiding you down a different path in life, then our confidence in ourselves will never go away. And for me personally, I'm opening up today, but for me personally, I don't worry about future career issues of mine that I can't control. Because God already knows what's going to happen, which puts me at ease. So have the confidence that don't kill you can only make you stronger. It's like that Rodin sculpture of I think, therefore I am. Confidence is faith. Number 4, take big risks and don't fear failure. Because as Mark Cuban said, you only have to be right in business one time. So take big risks with how you present in meetings. Take risks with your go-to-market strategy. Define the marketplace instead of being a lemming and following others. Now, we all get a second, third, and fourth chance in life. And given this new shoe company, Kanye was actually worth, at one point, negative $53 million in 2015, when he was a very young 36 years old. And people were laughing at him, as his first shoe he released years earlier was called The College Dropout, which is an homage to one of his earlier albums. Now, what he did, Kanye, was he persisted, and he remained a contrarian. And now he's a billionaire many times over because of his Yeezy shoe line. That's what it's called, Yeezy. And Nike actually screwed him over on profits. So he said, screw you, Nike. I'm going to partner with Adidas. Who has the guts to say that? Screw you, Nike. I'll partner with Adidas. Imagine Michael Jordan doing that? Never. And if you look at the growth trajectory, actually, of Yeezy shoes, he could easily make the brand worth way more than anything Michael Jordan has ever done with Nike shoes. Heck, one day, perhaps a partnership with Apple could mean shoes can finally enter the digital age as IoT-based or Internet of Things devices. And so what Kanye does is he designs for sneakers like Apple has done for elegantly designed computers. He also understands supply and demand, and he makes limited editions of many of his products that sell for thousands of bucks. And if you don't believe me, let's go together to eBay, and then we'll go to StockX.com, and I'll show you how insanely highly priced these shoes are. So if we go to eBay here, what I'll do is I will search for Yeezy. And then what I'll do is I'm going to go down here and select sold items. Hold on a second. Here we go. Sold items. Yeah. Because you don't want to look at what people are asking for. When something sells, that's what sets the price. So let's go price plus shipping highest first, just for fun. And let's look here. Okay. All right. This one here sold for $9,900. Right? And red usually means limited edition. This one here, the Louis Vuitton Kanye shoes sold for $9,000. Yeah. Actually, I don't know if that one's Yeezy. But there's tons here that are Yeezy. He used to partner more with Nike. Now he's with Adidas. But they're worth a fortune, these things. And what you can do is you can go to a website called StockX and buy Yeezys here. This is where most people buy them, right? So if you scroll down, you'll see a ton of Yeezys. Here's the logo there. Yeah. And these things go for the cheaper ones. And I have a very, very cheap one I'll show you in a minute. They cost a minimal amount relative to his other ones. All right. Let's move on. So he's a 43-year-old overnight success. And if you think you can't change careers and you're 40, for example, you're wrong. Because the average age of somebody starting a company in America is now over 50 years old. And even Barack Obama, he said in his recent book that when he was about 40 years old, his marriage was falling apart and he was a failure and he was a failed politician. But he had the confidence and the chutzpah to carry on and reinvent himself. Obama was a failure. He admits it at about 40 years old. It's never too late to start over for any of us. Now, Kanye also sings, which brings us to our fifth quality of Kanye, which is passion. And what drives me personally is seeing people passionate about what they do. Like Kanye West or athletes or Jodie Foster in the movie Contact. Check out that movie. She's incredibly passionate. It's an amazing movie. And passion, I humbly believe, is wonderfully contagious. And if you follow or hang out with passionate people, then you'll become even more passionate. And this is why two girls or two guys in a garage can start a company and put a 100-year-old empire out of business. Confidence. Number 6 is inspiration. Kanye analyzed the Wright brothers and Da Vinci and Steve Jobs and many others and learned from them. And so he is the Da Vinci of music, and his music has so many layers and interpretations, and it's multi-dimensional, astounding sonic architecture. And in his music, you can actually, if you listen to it, you can hear the brilliant chord progression and complex arrangements from his studying of inspiring musicians like Led Zeppelin, Latin-based Gregorian chants, and when he went on tour with U2. And he's got this wonderful combination of melody and music. Number 7, and this one is controversial. Number 7 is controversy. They say that there's no such thing as bad publicity. Now, I don't entirely agree with that, but Kanye uses controversy and the media a lot, and this is free PR for him. Now, companies that use controversy tastefully to leverage the media include Salesforce, when the company stated that traditional software is dead, or me being controversial by saying that Harvard Business School, which is HBS, 2/3 of HBS is BS. Or maybe it's 2/3 of Haroun Business School is BS. I don't know yet. We'll find out. Number 8, he thoroughly understands the supply chain for his shoes and upcoming clothing lines as well. And he talks about eventually controlling the seed to the sow. And in the music industry, he actually started out as a producer and then a writer of songs for John Legend, Alicia Keys, Ludacris, and many, many others. So you need to thoroughly understand the entire supply chain, like Apple does, in order to make insanely great Gucci profit margins. My kid said that's a term, Gucci. All right, lastly, number 9. He is very transparent, and people see authenticity as he is transparent about his bipolar, mental, and depression issues, and also his "I want to end me" thoughts. And I'll be transparent with you too. All right, so I bought I bought the cheapest Yeezys I could find. Okay, and I bought this on StockX, I think about 2 years ago or so. And at first I thought that this product looked ridiculous, right? I mean, I'm the ridiculous one. This 50-year-old man-child is wearing these here. I thought that it looked moronic. They're so wide at the bottom. But the build quality is incredibly good. It's amazing. Yeah, they're incredible. You get what you pay for. And over the past 2 years, in this studio here, and y'all know I have a treadmill down there. In this studio here over the past 2 years, I've taken about 15 million steps with these shoes on. Okay? Because I walk 20,000 steps per day while I work. Alexa, what is 20,000 times 365 times 2?
20,000 times 365 times 2 is 14.6 million.
Okay, I exaggerate. I said 15 million, but 14.6 is pretty close. It's amazing. Yeah, I walk all day long while I work. I get a lot of work done that way. I feel like I'm always just waking up because I do that. You got to try that. Try exercising while you're working. It works, I promise. All right, so the bottom line is we can think about using some of the 9 qualities of Kanye to take our careers to the next level. And those 9s are be different, meaning be you. Number 2 is confidence. Number 3 is a positive attitude of events that occur for us, not to us. Number 4 is take risks, as you only need to be right in business one time. Number 5, be passionate and follow or hang out with passionate people. 6, seek inspiration. Either inspire or be inspired. Number 7, tasteful controversy can help your business. Number 8, thoroughly understand the supply chain. And number 9, be transparent, as transparency builds trust. All right. All right. I try to drink this water thing every single day here. Actually, it helps me a lot with energy as well. I'm trying something new too with clothes. I don't know if this works, but I'm trying it out. This is what old men wear. Okay. So I'm playing the part. All right. I refinanced my mortgage last night. And if you have a mortgage, please turn me off and see if you can refinance because interest rates are going up. Without a doubt, they're going up because inflation is all around us. And governments say that inflation is not a significant issue, but they're wrong. You know, it doesn't take a rocket scientist to understand that lumber prices are at an all-time high. So are the price of real estate in many markets. Used car prices went up 10% month over month, which is the highest monthly increase in history. And the prices of so many products are going up. And so this means that governments are going to have no choice but to raise interest rates soon in order to control inflation. So how do we know, what the market expects when it comes to interest rates? So I'm going to show you. This is a lot of fun. There's something called the yield curve, which basically the government shares with us so we can see what short and long-term interest rates are. Okay, and let's go together to treasury.gov. And what we're going to do is together, we're going to make a yield curve in Excel. I'll do this really, really quickly. Okay, so let's go over here to treasury.gov. Okay. And Treasury, and I've got a bookmark, but let me go to the main page just to show you how to get there. So it's, of course, the government website here, treasury.gov. And then you click here on data and then select daily Treasury yield curve. Okay. And what I'm going to do is I'm going to take this data and create a chart for you in Excel and explain it. But before I go there, let me first of all say that this data goes all the way back to 1990. You can get the Treasury or government rates here. For every single weekday since 1990, right? And so this is the current month. If you're watching the replay, this is June 3rd, my anniversary, 2021, right? But if you click here, whoops. Yeah, if you click here, you can see the entire year so far of 2021, okay? And basically, these are short-term and long-term interest rates. All right, let's keep it simple, though, and just look at the current month. And I'm going to map this out for you on a chart so I can explain what it means. But it basically means what rates are going to be in the long term and in the short term that the market's pricing right now. So let me just take this here and copy. Okay, I'm going to copy just this line here. And I'm going to go over to Excel and create a yield curve, which is the easiest way to explain this and the most fun way too. So I'll paste this here. And I'm going to go and insert. Give me 1 second. I'm going to insert a chart. So I'm going to insert this chart here. And then I will change the chart type so we can just see that yield curve there, right there. Good. And then I'll make this a lot bigger as well. And I will zoom in a second. And oh my goodness, I talk a lot. Okay. Now for the axes, give me 1 second. I'm going to cheat here. The axes on the bottom, you've got time. So I'm going to copy that. Copy. And then paste that there. There we go. And I'll zoom in 1 second. It's the easiest and fastest way to show this thing. Okay, great. That's good enough. Okay, so what we've got here is on this axis down here, we've got, and I'll zoom in slightly more. On this axis down here, we're building the yield curve, okay? We've got time, okay? So 1 month, 2 month, all the way up to 30 year. On this axis here, and I'll make it bigger, we've got the interest rates. Okay, so, in 30 years, the market is predicting interest rates will be 2.3%. Okay, so this is a yield curve here. And so basically, and it usually looks, let me draw this actually, it's an easier way to show you by drawing. But usually the way it works is it looks like this. Okay, the reason it doesn't look like that is because right here, you've got 1, 2, 3, 6 months, and then here it gaps into years and then decades, okay? But basically, the way it usually looks is it looks something like, it looks something like this here. Okay, that's a normal yield curve. Okay, so what this is telling us here, this chart, and look at this line down here. What this is telling us is that the 1 month rate is very, very low. It's basically zero. Okay, and then it's also telling us that the 30-year rate is 2.3%, and this is what's referred to as a normal yield curve. So normal means rates are low now and they're going to be higher in the future, which basically means people think the economy is going to be better in the future, many, many years from now. Now, if we see what's referred to as an inverted yield curve, it signals that things are going to be bad in the future, or the market thinks so at least. Okay, and so let me draw an inverted yield curve, and I'll explain that as well. All right, so an inverted yield curve looks something like this, okay, roughly. And basically an inverted yield curve basically says that rates are high now, okay, but they're going to be lower in 30 years in the future, right? And when rates are low, it's because the economy sucks. Right. So anyway, the government cuts rates in order to jumpstart the economy. So that's what an inverted yield curve would approximately look like. Let me delete this stuff here so I can go on to the next topic here. Okay. Now, since the United States interest rates for U.S. government securities are quite low risk investments like U.S. government debt, the more risky a company is, the higher up rates will be relative to the yield curve. And I'm going to draw that in a second. But before I go there, I want to go back here and just show you quickly rates. So rates right now are about 0.01%. Okay, that's very low. The 30-year just dipped down yesterday from 2.3% the day before to 2.28, which is why you have to refinance your mortgage. Okay, but if we go back just for fun to 2019, we can see that rates were higher then. Okay, so the 1 month on January 2nd of 2019 was 2.4%. And the 30-year was higher as well at 2.97%. That is much higher than what we have now because in 2019 the economy was doing well, and I think the government should have raised rates more then. And I'll explain why in a little bit. Okay, so now let's go back here to my yield curve, and I'm going to explain to you how companies price debt off of the yield curve. They all work together. So here's how it works. So the lowest risk investments in the world, according to many people, whatever, is U.S. government investments. And that's all priced here on the yield curve. And so the government's interest rates are 0.01% here for 1 month. And over here, it's 2.3%. Okay. Now, when companies want to sell debt, and this basically is like a debt curve. It tells you what debt rates are going to be. But if companies want to sell debt, they have their own yield curve as well. And because companies are much riskier than the United States government, what happens is they can't charge a low rate. Okay, so a typical yield curve looks like this. Okay, but if you're a company with a yield curve, and pretend the pink line there is United States government rates yield curve. If you're a company, you can't charge low rates like the U.S. government because you're more risky. So your yield curve is going to look something like this. Right, and you're going to pay more. You're going to charge more in interest. Okay, and if you're a very, very, very risky company, then you sell what are called junk bonds, or high yield bonds is the politically correct term, which means that it's going to be way, way, way up here, way above this chart even. Okay, so junk bonds would sell at much higher yields, and mortgages also are priced off of this yield curve. You know, that's why a lot of mortgage investors will look closely at the yield curve. So monitor it daily, because the bottom line is, if you want to see how rates are trending and really, really understand yield curves, you got to go to treasury.gov. Okay, and if you have a mortgage, please refinance your mortgage ASAP. Please, 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 because I promise you, the Fed is going to be raising rates very soon. Okay. Okay, hold on one second. Oh, yeah. I think that we're in an unprecedented investment bubble, and I'm actually worried. And I say that this is unprecedented because we've never, ever seen an investing environment where there were so many different sectors at all-time highs at the exact same time. It's frightening. And many stock markets are near an all-time high. Input prices like lumber and the real estate sectors are at all-time highs in many markets. Cryptocurrencies until recently were at an all-time high. And even the collectibles market, man. The collectibles market is at an all-time high, meaning baseball cards, hockey cards, basketball cards, and even NFTs. And this here is a Wayne Gretzky rookie card. Okay, a smaller version of this card was sold recently for close to $4 million. It's unbelievable. And one of my first side businesses when I was a kid was I enlarged cards and I sold them for $10 each. I didn't know that was against the law back then from a copyright perspective. But anyway, that's what I did. And I used to stick these in my wall too. It's kind of fun. I think I was like 11 years old or so. Yeah. All right. So why are the prices of so many investments at all-time highs? What's going on? Well, it's because desperate times call for desperate measures. And governments are very worried, rightly so, about the impact of COVID. That what they decided to do was to keep interest rates close to zero. And what happens is when interest rates are very, very low, people don't keep money in the bank because cash is trash and rates are too low. In fact, over the past year, the United States government has printed about 30% more money than existed in 2019. And it dilutes all of us. It's not fair, but that's okay because many of us are making money in different investments now. So what happens is when interest rates are zero, it encourages people to invest elsewhere, like stocks, real estate, etc. Now, the economic impacts of COVID are unknown. So governments have kept rates low for much, much longer than they usually do, which has led to many bubbles. And prices are increasing all around us. And this is not sustainable. So I think what's going to happen is governments are going to soon start raising rates in order to stop prices from rising. And when rates go up, it's harder for us to get loans to invest, and people leave more money in the bank to make the higher interest rate when rates rise. Now, an extreme example of when rates were as high as close to 20% was around 1980, when the United States Manager of Money, meaning the Federal Reserve, United States Manager of Money, the Federal Reserve chairperson, Paul Volcker, raised rates to close to 20% in order to fight inflation. It was a scary time in 1980. I remember my dad in Canada, he had a big mortgage on the house, and he was just starting his company as well. And in Canada, you can't write off the interest on your mortgage. So we had a 20% mortgage as a kid. And my dad's awesome dealing with pressure. He's unemotional, which is awesome. So we got in the middle there Paul Volcker, and so he was, God bless him, he just passed away, the manager of the Store of Money in America. And then on the left there you got Alan Greenspan in the glasses, who was the Federal Reserve chairperson up until I think the 2005 or 6. And then you got Ben Bernanke, who's my hero, on the other side there. Ben Bernanke was the Federal Reserve chairperson in 2008 when we were within 24 hours of bank machines not working. And the reason I say he's my hero, and it's controversial, is because he did his PhD at Princeton University in depressionary economics. And had Bernanke not done his PhD at Princeton in depressionary economics, then he would not have pulled a lot of levers to fix the economy fast. And we could have gone into another Great Depression in 2008. Okay, so Volcker's in the middle. Times were tough in the early 80s. And just imagine having a mortgage near 20%. Now, what happened was in 1980, because rates were so high, investors did not buy stocks or real estate because they could make close to 20% by leaving their money in the banks. And as a result, hardly any companies were founded in 1980s. And it was devastating for the U.S. economy back then. Now, I don't think the United States government is going to raise rates that much in the near term. But Volcker, the Fed chairman, had to raise rates then and quickly to fight inflation. Prices were rising fast. In fact, what he did was he flew to Germany in 1980 to get advice from German economists, because Germany had brutal post-World War I inflation, and the Deutschmark became basically worthless. So people actually, this is fascinating when it comes to the Deutschmark. People even use wheelbarrows to bring German money to markets to buy a loaf of bread after World War I. And what also happened was kids played with money because it was worthless. Now, the result of rising interest rates in the 1980s, early 80s, decimated the economy in the near term, but it was the right decision. You have to fight inflation, otherwise you don't have an economy. So the bottom line is that I believe that rates are going up soon in order for the government to fight inflation, and I'm currently not a net buyer of investments at this point. I humbly believe that some governments manipulated the stock market last year by buying some of the lowest quality investments, which led to an unprecedented short squeeze that caused many hedge funds to reverse their short positions. Now, a short is the opposite of buying a stock. When you buy a stock, you're long the stock. When you short a stock, it's the opposite of being long, hence the name. And when you're short a stock, there can be unlimited losses if the stock goes up a lot. And as a result of this, from a risk management perspective, many hedge funds actually give up on a short if it rises by 10 or 15%. And so short covering leads to more short covering. And if the crappiest stocks go up a lot, then many hedge funds give up and they get out of their short positions. And government manipulation of markets is something we've seen in the past. And some people refer to this government manipulation of markets as slush funds or offshore accounts that certain governments use to buy stocks in order to push the market higher. Now, the US government pushed the market higher in September of 2008. How do I know this? I know this because I had friends that ran hedge funds. And the bank that my friends used to store their hedge fund positions, meaning their prime broker, was Lehman Brothers. And in September of 2008, the United States government allowed Lehman Brothers to go bankrupt. And the United States government seized all of the shares that Lehman Brothers hedge fund clients were short. And then in September of 2008, on a Friday, the government, what they did was they covered all those short positions, which drove the U.S. markets higher. And the government also on that day in 2008, they made it against the law to short about 800 different stocks for a while, including many banks and auto companies like GM, which we refer to as government motors. And I remember it well. I remember really well. I ran my hedge fund at that point, and we were tempted to give up and cover our shorts that Friday. But we did not do that, thank goodness, because and we were thinking at that point in time, if the government made it illegal for a while to short 800 stocks, then we'd have no great short positions left in our portfolio. And so I was humbly right at that point. Yeah, in hindsight. Rarely happens, but I was right then. So why did the market go up a lot at one point earlier in 2020 when the fundamentals were just awful for the markets? Doesn't make sense. Well, the best way to explain what happened is by talking about the two medicines that governments have to fix the economy. One of the medicines is called monetary policy, and the other medicine is called fiscal policy. Now, monetary policy is, as it states, the policy of money. When the economy is in terrible shape, what the government does is they print more money. And we know that if you increase the supply of anything, the price goes down. So when the government materially increased the supply of money in early 2020, the price of money, meaning interest rates, went down a lot. And the government made a few monetary policy mistakes. Number one, when the economy was doing incredibly well, or much better, from 2017 till 2019, the government should have had the foresight to raise interest rates more. They did not do this for certain political reasons. So when the economy was very sick in early 2020, they couldn't jumpstart the economy enough by cutting interest rates. The second monetary policy mistake the government made in early 2020 was the government actually cut interest rates by a full percent on a Sunday. First of all, they never ever cut interest rates on Sundays, and certainly not by an entire 1%. That's a lot. So what happened was on the next day, on a Monday morning, instead of the market going up big time because rates were lower, the market sold off materially because the government caused people to freak out, because they made such a drastic cut on a Sunday by 1%. Then what happened was there was no more medicine left in the monetary policy bottle, meaning no more bullets left in the chamber to jumpstart the economy. Rates can go much lower. So this brings us to the second medicine that governments use to help the economy, which is called fiscal policy. Fiscal policy is basically everything else a government can do to help the economy that's not tied to interest rates. And fiscal policy includes stimulus checks, big public works projects like building highways, which helps with employment, etc. And there was actually concern that this massive fiscal policy was not going to help enough. So if you're a big government, what can you do to help United States consumers spend more money? What can you do? Right? If you're out of fiscal medicine and monetary medicine, there's no more medicine left. Well, the United States is the largest economy in the world. And 2/3 of the United States economy is consumer spending, not big business. It's consumer spending. And if you're the Chinese government, which is very much reliant on the United States consumer through exports, if you're the Chinese government and you're reliant on the US for exports, and if you're worried about civil unrest, then hypothetically speaking, wouldn't it make sense to buy US stocks as the third medicine to help the US economy? This wouldn't cost very much to do, and consumers would feel richer and spend more money, and everybody wins. And Machiavelli once said that the ends justify the means. And wouldn't it make sense to stop the next Tiananmen Square uprising and civil unrest by thinking about buying the most shorted United States stocks in order to cause hedge funds to cover shorts, and also from a FOMO or fear of missing out perspective, many other people started buying stocks as well. They jumped on the bandwagon. Perhaps one day this will become declassified, and we might know for sure if this really happened. And I would be shocked if this, I would not be shocked, I should say, if this did in fact take place, as the ends justify the means. Gotta love freedom of speech. As critical as I am of communism and the inherent lack of freedom of speech, I want to discuss why I respect the long-term outlook of the Chinese government when it comes to the business of their economy. There's a saying about the government in Beijing that Chinese communists are the best capitalists when talking about the long-term focus of China Incorporated. And it's unfortunate that many of our politicians and business leaders are so short-term focused. Wall Street incentivizes CEOs to be quarterly focused and hence very short-term focused. And our political system, as much as I respect it, is also too short-term focused. And I really wish that the Federal Reserve in the United States was more long-term focused and they'd raised interest rates more when times were great for the economy in 2017 through 2019. And had we done so, then we'd have more leeway in terms of being able to cut interest rates to offset the economic turmoil that we saw in the past year. And the impact is severe because inflation is a material issue now. And federal politics aside, I also criticize the state of California for letting taxes get out of control. And the long-term impact is going to be devastating for my beloved California, as massive tax-paying companies like Oracle and Charles Schwab are leaving to go to Texas. And we know that, given COVID, working from home is a possibility. We don't always need to be at work. A lot of big tech companies don't have employees at work anymore. And so we don't need to be located at big cities anymore to have a tech company prosper. And so last year, actually, for the first time ever, the population in California decreased. And China is actually seeing the same phenomenon when it comes to a material slowdown in population growth. And as a result, China now allows residents to have more than 2 children each. Now, quick side note, it's fascinating, but I spent time in Shanghai in 2006 when I was investing in video game companies. And at that point, I asked a senior video game executive in Shanghai, why is it that World of Warcraft and PC gaming is way more popular in China? And the answer was fascinating. The answer was that after dinner in most countries, kids go play with their brothers and sisters. But in China, there was this one child per family policy then. And the way you communicate with your friends was through PC gaming. Okay, back on track, Chris. Back to being long-term focused. The government in China understands that a risk to their economy is that they are dependent on exports to the United States. And so China's top priority from a business perspective is building up their own internally focused consumer so that they are no longer exposed to exports, which is smart and certainly long-term focused. Now, this is something I wish that most CEOs and politicians in the US had, right? This policy of being long-term focused. Because as Warren Buffett says, the longer the view, the wiser the intention. Oligopolies like Google and Apple are terrible when it comes to playing fair and market innovation. And I humbly believe that this decade, these companies here will be broken up or regulated. Apple and Android dominate the smartphone market. And, mobile innovation has died. And when these awesome, Apple iPhones and Android smartphones first came out, it was so exciting to download new killer apps or games. And then innovation kind of just stopped. And what Apple is doing in the gaming market by offering their own arcade service and promoting that instead of allowing other gaming companies to thrive on their platform is a material issue, right? It's anti-competitive. And I remember I used to really look forward to games coming out on iOS, like Field Runners 1 and 2 on iOS. And there were awesome new games released every single week, right? And the new games on these platforms are now brutal, except for that NBA game. And the same thing can be said with new apps. Okay, innovation has died, and I think it's because oligopolies tend to abuse their market power, right? And it's actually similar in the airline industry as well. Two big companies more or less dominate the industry. You've got Airbus, which is owned by EADS in Europe, and you've got Boeing, which of course is based in the United States. And in my entire life, all 50 years, we have not seen the speed of these birds or these airplanes in the sky increase at all. The speed of travel is still the same as it was back in the 1960s. It's ridiculous. Now, the aircraft market is an oligopoly. And to be intellectually honest, it's very CapEx intensive to compete in that market, which is why it's still dominated by a handful of companies. But it's a great analogy to use when it comes to the lack of innovation because of Google and Apple abusing their oligopolistic. Dude, I'm making a fool of myself here. And by the way, whenever you're up on stage and you make a mistake like I just did there, don't worry, you become more likable because you appear more human. So I'm going to do that one again. And by the way, if you skip a point, if you screw up like I did, if you skip something, no one's ever going to know. But I'm not going to skip it. So Apple and Google are abusing their oligopolistic power. There we go. I'll leave it at that. Now, competition, we know, is good for consumers. And I do think that these companies should be broken up in order to increase competition and innovation, especially Google, which owns the two biggest search engines in the world, which are Google and, of course, YouTube. All right. That was fun. All right, now let's move on to questions. And as you know, I answer all the questions in the order in which I receive them. If I don't answer your question, just paste it again, please. And what I'm going to do is I put my foot in a box here to change the slides. I'll show you, actually. It's right here. Right, and I put towels on top of it. So this changes the slides. These are pedals, one's left, one's right. See there? Yeah. And it hooks up to a USB port, so I can change the PowerPoint slides. And I put a towel on top because it stops the clicking noise. So you don't hear it as much. But what I'm going to do is I'm going to put on my Yeezys because they're so comfortable. It makes me want to go for a walk. And these are the cheapest ones I could find. And a lot of these things are actually fake, which is why people like to buy these things from a website called StockX. hedge.com. Again, these are the cheapest ones you can possibly find. All right. I don't know. What do you guys think? Use this or don't use this? I'm not sure. It's kind of fun playing grown up. Yeah. I even got somebody to cut my hair for the first time in decades, actually. Yeah. Trying to push the goalpost out. All right, let's do this, folks. What I'm going to do is I'm going to start taking your questions. If I miss it, just paste them again, please. All right. Let me go over here. Good. Okay, good. All right. First, and I'll talk about how you can win today. One person is going to win the MBA degree program. Okay, you can't have won it in the past though. Okay, or have taken it. I'll explain soon how to get it. It'll be fun. It'll be gamification. All right. First up, I've got Demian Valenzuela, who's one of my amazing MBA degree students, actually from Spain. How are you? Demian is saying, Dear Chris, hope you're well. Likewise. Today, I have no questions. I just want to share with everyone that I'm increasingly convinced that your MBA program is very practical and relevant. Thank you. I appreciate that. God bless you. God bless you. And next up, Patrick wrote, Hey, Chris, how are you? I'm always great. Thank you. I hope you're doing well. And then you wrote, do you think that it's still worth mining crypto, or are all the returns not worth the investment anymore? Yeah. It all depends on your profitability based on the cost of electricity where you live, right? And so the way it works is there's something called a kilowatt hour, or kWh. You need to do a search on what the kWh, or cost of electricity per hour, is where you live. You know, if it's less than 15 cents, then it might make sense to do so. If it's higher, it might not. And also it depends on if you can get the parts as well. I'm currently mining a cryptocurrencies, and I've had the same machine that's been running for years now. I haven't changed anything about it. It's still plugged in. I'll show you. So if you go to my website /crypto, all lowercase. Whoops. Give me 1 second. Sorry, wrong keyboard. Go to my website /crypto. What you can see here, if you click here, is my mining computer, right? So I am mining Ethereum right now. The balance is that much. And once this gets to 0.2 of an Ether, we're almost halfway there, then I get paid out to my public key here on my Coinbase wallet. And I am an investor in Coinbase. I have been for a while. Yeah. So but it all depends. Like for me, I have solar on the roof. You know, it's expensive here in California, electricity, but I do have solar, which helps a lot. Yeah. All right. And next time, Demian said, each time I progressed, I can check how many resources you offer us. I'm going for the 7%. I'm sure that when I complete it, I'll be more prepared to face new challenges. Yeah. Thank you. And then you wrote, thank you very much for your dedication and work. God bless you. God bless you way more, brother. Yeah. And don't forget to get that Fernando Valenzuela shirt for your kids. Yeah. Okay. Next up, I've got Mohammed. He's saying, hey, Chris, do you check your LinkedIn messages? I sent you one of the templates you provide in your course filled up. I hope you can tell me your thoughts. Yeah. So I get inundated a lot. The best thing to do is to ask me in a course that you're taking of mine, or if you're in my MBA program, ask me there as well. Yeah. Thank you. All right. Next up, Zoralina wrote, hey, Chris, when an IPO is created, hedge funds, mutual funds, etc., are buying shares. Are they buying before it goes public? Yeah. So most of the time, no. So the way an IPO works is the investment bankers will underwrite the deal, meaning they'll put together all the paperwork, and then they'll create brand new shares to sell to the public. And they sell two classes of shares. You know, one of them is primary shares, the other is secondary. Primary shares are brand new shares that they create, and the company, the use of proceeds from people buying those shares is the company uses that to grow or make acquisitions. Then there's secondary shares, which means insiders can sell, right? Like employees that have worked there for ages, or venture capitalists, right? Those are secondary shares. And when you sell, and I've done it many times as an insider and also as a venture capitalist, when you sell, you have to wait 6 months after IPO to sell those secondary shares of yours. Now, when the hedge funds and mutual funds participate, they usually buy on day one, if it's a good stock, a good investment, through their prime brokerage firm, right? Their new shareholders. There are some, though, some firms that are hybrids, right? And I have my own hybrid company, which was a hedge fund and a venture capital firm. And if you want to understand more about hedge funds that do venture capital as well as hybrid stuff, do a search for Tiger Global and a brilliant man named Chase Coleman. Yeah. Good guy, too. All right. Next up, B. John said, "Hi, Chris. I'm a high school student. Hey, and I wanted to intern at an investment firm. Should I have a meeting with someone or cold email them? In a meeting, what should I say, and how can I ask for an internship?" Yeah. So I think the most important thing you can do, and let me give you a free course. Let me give everybody a free course, actually. Yeah. So I think the best thing you can do is you network a lot, and I'm going to show you how to write the best resume ever. So let me go to my website here. Go to Haroun Ventures, okay? And then if you go to, when you're here, you type here all lowercase, all one word, complete job, okay? And anybody can download this today too. So this will teach you how to make the best resume, LinkedIn profile, network, much more. And it's free. You can take it for free today. And hi there, that's me. Yeah. Now, in terms of what to say in a meeting, when you're bonding with somebody for the first time, you want to talk about what you have in common. And the easiest way to do this is to is before the meeting, go to the Twitter profile of that person and find out who she or he follows. So if they follow baseball, then you can talk about baseball, right? And for me, I love baseball. And if I find out somebody loves baseball, I find out where they're from in the country. I ask them, and I talk baseball. And this is from Chicago. This is Andre Dawson, the Hawks MVP in 2007. Yeah. And it works for all sports too, and also other interests. If somebody follows environmental rights activists, you can talk about that in a meeting as well. You always want to bond before business. Never jump right into business, because business is about relationships first and product knowledge second. Yeah. All right. All right. Next up, Zoralina said, "Hi again. Companies have shares. As a buyer, is it possible to be in a situation where you cannot buy any shares because there are none available at certain times?" Yeah. There's usually a market for shares. Like before you buy a stock, you always want to look to see if the stock is liquid, meaning if it trades a lot. And you want to be able to see if you can get in and out of the stock if need be, within an hour or so. And so illiquid stocks own you in a down market instead of vice versa. They're tough to get out of. But there's usually a market for everything, right? But if a stock doesn't trade very much, then the difference between the bid and the ask spread is very, very wide, right? So you want to be careful about that, yeah. Make sure it's liquid, yeah. But there's a market for everything. People, even that Wayne Gretzky card, dude. Like somebody paid, $3.75 million for a Wayne Gretzky PSA 10 rookie recently, right? There's a market for it. And I remember a couple of years ago, it was $100,000. Yeah. And yes, I have a bunch of them that aren't worth as much because I put them on the spokes of my bike, so it sounded like a motorbike when I was a kid. I'm not the smartest guy. Okay. Next up, KGK is saying, really appreciate your video on NFTs. Thank you. Continuing on that topic, do you think the major movie and TV studios or music labels could be sitting on a potential gold mine? Absolutely. Anybody that makes media potentially is, within reason. Even that there's those two brothers. Remember that YouTube video from 14 years ago? Charlie bit my finger. They auctioned that off for $500,000. The NFT, so somebody owns the rights to it as well, the digital rights, right? And the younger generation, like my kids, they don't have as many toys as my generation did because they own the digital rights to stuff in the cloud. And as they grow up and become big consumers, then that market will only grow. Are we in a bubble right now? Absolutely we are. Am I a net buyer? No. God, no. And the way that I know the best time to buy stocks and back up the truck, the easiest way is this. I'll show you. And this never fails, right? So you go to finance.yahoo.com, and then when you're here, you do a search for VIX, which is the volatility index on the Chicago Board of Exchange. It means how volatile is the S&P 500. And I'm currently making a Udemy course and part of my MBA program called the Complete Derivatives Options course. It's coming out later this year. But what you do is you look at a chart of it, and when you see the VIX spike to near an all-time high, That's once a decade, whatever. That's when you back up the truck and buy stocks. And so what happened was in 2008, it spiked. And then in 2020, it actually spiked intraday much higher than it did in '08. And that's when you back up the truck and buy stocks, right? When the VIX is high, everyone's freaking out, which means you should buy, because if you buy when everybody else is, it's hard to make money. You got to be contrarian. So right now the VIX is below 20. There's not that much fear in the markets. But when the VIX spikes, that's usually when I buy, because everyone's freaking out. Yeah. All right. Okay, cool. All right, next up, Hashem wrote, hey, Chris, you talked before about how you published articles on Inc. and other platforms. Can you please explain how you did it? I'm in high school, and I have some really good articles to publish. Yeah. So what you can do is you can publish for free on LinkedIn. You can also publish on Method if you want to. I don't use Method anymore. I don't think it's going to make it. You can use other platforms as well, smaller forms of your articles like tweets or quotes from it. So the best way to do it is to use a website called Hootsuite.com, and it's free. So Hootsuite.com will allow you to post your articles to many platforms at the same time. Now, in terms of getting your own column, like I did with Inc. Magazine, you have to write a lot. And if you write like crazy on LinkedIn and you network like I did, eventually you'll be discovered and you'll get your own column if you want to. Yeah. I didn't like it though, because I was given complete freedom, except sometimes I was kind of forced to write about a certain, I hated that. Yeah. That's why I don't do it anymore. Yeah. All right. Nobody's the boss of me. All right. Next up, and if you want to learn how to write gooder, what you can do is just do a search. Go to HarounVentures.com, and at the top, do a search on writing and all that stuff. I've made so many vlogs on that as well. Yeah. All right. Next up, Hashem wrote. Nicole wrote, I can't wait. I bought your cryptocurrency course on Udemy, and what a game changer. Thank you. I appreciate that. Thank you. And then you wrote, love the work that went into the spreadsheet that makes it extremely easy to follow. I appreciate it. I worked day and night on that. I worked so hard on that course, that crypto course, that I hired this guy to proofread everything. I spent a couple of $1,000 on him, which was worth it, right? It's a good return on investment. And then the NSA knocked on my door. And I was like, oh my God, why the hell is the NSA here? I'm not Edward Snowden. That's kind of scary, right? And the NSA asked about this person who I'll never name. And the reason they asked about this person, I think, is because they wanted to hire him. Because the NSA basically created the secure algorithms that many cryptocurrencies are based on, meaning Bitcoin's secure algorithm of SHA-256. Yeah. So I was a reference check. Yeah. And I should have worn a diaper that day. Yeah. All right, next up, I've got Ali who's saying, hey, Chris, hey, considering that you worked at a hedge fund, can you please provide perspective on what happens when a stock gets added to the Russell 2000? Does the stock go up after that? Yeah. So what happens is this. It's a great question. So there are indexes that represent markets. And so the S&P 500 is 500 stocks that make up the U.S. markets. The Russell 2000 is an index of 2,000 smaller companies that are growing quickly. That's the Russell 2000 index. And what happens is you can buy ETFs or funds, exchange traded funds, that represent indexes, right? So you can buy SPY is the ETF for the S&P 500, and there's one as well for the Russell 2000. And so what happens is when the company Russell decides to add another stock to that index, right, and take out another one, then all these funds that have ETFs that represent those 2,000 stocks, they have to rebalance their portfolio and boot one stock that got taken out and put that new one in. As a result, from a supply and demand perspective, the stock being added goes up a lot, right? More so in the Russell than the S&P because the Russell is less liquid, right? They're mid caps. So the stock goes up a lot. Yeah. So, and it happened to Tesla with the S&P like a year or two ago. It was added and it spiked a lot because of that. It all comes down to basic supply and demand, right? But it's short-lived. It's usually a temporary spike. Yeah. All right, next up, Harsh wrote, it's a bit personal, but Chris, can you tell me what was your assets under management when you managed your hedge fund? Yeah, I don't share anything about performance or numbers for my clients. Yeah, but thank you. Yeah. All right, next up we got persona non grata. Good day, Chris. if cryptocurrencies will be banned globally one day, will they lose all their value? Okay. And B, do you think cryptocurrencies will be banned globally one day? Gratefully yours. Oh, thank you. I appreciate that. Yeah. I don't. I think what's going to happen is a lot of countries are going to ban cryptos, but not all of them, right? Not all of them. It's like the terrible analogy, but the drug trade, heroin. Of course, it's illegal everywhere. Maybe one or two countries it's not, but it's still out there, right? There's always going to be a black market, so to speak, like a Mount Gox or, these really shady markets where you can buy and sell stuff, nuclear arms, whatever it is, terrible. And cryptos will be used for that because they can't really be traced. Yeah. So I don't think you can stop it. It's like saying, I'm going to put my hand in a stream and try to stop minnows from swimming upstream. They'll go through your fingers. You just can't stop it. Yeah. But yes, I believe a lot of countries are going to make it illegal because if we, hypothetically speaking, didn't use our own currencies and we just use cryptos, then governments couldn't make more of this stuff and sell it and change interest rates to raise money through bonds to protect the country, do public works events, stuff, etc. Yeah. It's going to be illegal. And I think it should be loosely regulated. And I say loosely because there are so many scammers out there, man. It is brutal. Like with a lot of my YouTube videos on cryptos, I have to delete comments all the time because people are asking, my viewers to provide their WhatsApp number to wire money and all that crap. It is so many scammers out there. I want some loose form of regulation, kind of like before you buy a stock. You have to file paperwork. It is a bubble right now. Do I like cryptos? Yes. I've owned 4 and I'm never selling them ever unless they hit my target price, which I won't tell you what they are. It's much higher. But there's more cryptos out there than there are paper-based fiat currencies. Yeah. There's got to be some sort of loose regulation. Yeah. All right. Next up, David Yerman. And we connected, I think, recently on LinkedIn. How are you? David wrote, Chris, good morning. I read Barron's magazine. And for those of you not familiar with Barron's, it's like the Wall Street Journal, but Saturday's version of the Wall Street Journal. Chris, I read Barron's magazine, but I skip the NYSE, composite list, NASDAQ issues, ETFs, mutual fund, weekly closed-end funds, and market laboratory. What are they about? Small funds. Yeah, it is small funds. And I read Barron's online right now. It's just a discussion of events that occurred in those aforementioned markets. That's it. Yeah. I like reading the roundtable discussion sometimes. It's fun. And my old boss, Art Sandberg, God bless him, he passed away from pancreatic cancer recently. He was always in those roundtables, as was Abby Joseph Cohen, who I worked with at Goldman years ago. She's great. Or she was in a different division, but yeah. All right. Next up, Gregory wrote, Chris, do you think I bonds are good alternatives to tips? Yeah. I've not done enough research on that to be able to answer that question properly. But what I will say is that for those of you that are worried about inflation and you want a relatively safe investment, you can buy what are called TIPS, right? The ticker's TIP. TIPS stands for Treasury Inflation Protected Securities. And what that means is it's got U.S. government debt that if inflation goes up and interest rates go up as well, these things will adjust as well, right? They'll go up like inflation does. So you're protected, hence the name Treasury Inflation Protected Securities. Yeah. All right, next up, Saleh wrote, good morning, Chris. Good morning. Do you have any tips on what I can do on my gap year to improve my resume? I'll be starting college next year. Yeah. So that's a tough call. And good for you for doing that. I wish in hindsight I'd done that too. Now, I don't think I was mature enough to go to school at 18 or, yeah. And I went to Quebec and Montreal, McGill, because the drinking age was 18. No regrets. So what I would do is this. I would think about what you're most passionate about in terms of helping people, right? Whatever drives you, makes you excited about helping other people. I would focus on that. So I would do charity work, right? And what I would do is, if you're in the United States, look into the Peace Corps, which was an organization President Kennedy, God bless him, created in the early 60s. See if you can help out there. It might be virtual help, because you might be doing Peace Corps online, that sort of thing. So I would try to volunteer at some sort of global charity or not-for-profit. And you might want to search for what is the alternative to Peace Corps in my country if you're not in the United States. That's what I would do. And it feels so wonderful to give your time as well and volunteer that way. It makes you more worldly. Yeah. All right, next up, Dylan wrote, hey, Chris, hope all... Oh, one more thing. Sally, I'd also focus on starting your own for-profit company on the side as well, your own side hustle. And for the rest of your life, always start these things until eventually one day one of them takes off. Yeah. And you can do that actually by checking out my complete business plan course, or take my MBA degree program, which goes into much more detail than that. Give me 1 second, guys. Sorry. Perfect. All right. Sorry, I'm getting this big exercise machine delivered today, and I want to make sure they're not outside. Yeah. All right. Next question I've got here is Dylan, and that's my son. I have Dylan as well. My son is named Dylan. Yeah. We were going to call him Luke, and then Andrew and Matthew, my older boys, freaked out. They said, I don't want baby brother to be named Luke. I want to name him Han Solo. And so we went with Dylan instead. Yeah, which is a cool name. So Dylan wrote, hey, Chris, hope all is well. Likewise. I've been going through your cryptocurrency course, and I'm thoroughly enjoying the content. Thank you. And we're just in the process of updating it. It's coming next week, by the way. Dylan then wrote, in your A plus B security intro video, towards the end, you instruct students to go to Yahoo Finance, enter BTC USD, to review the algorithm. I did this, now it says NA. Yeah. This is exactly what we're fixing. This is the first thing we're fixing. So what happens is, when I made the course, you could go to Yahoo Finance, and when you type in the ticker, BTC.USD for Bitcoin US dollars, or BTC-EUR for euros, if you go to the secure algorithm, it basically says what the security algorithm is, SHA-256. They've removed that, right? So we're updating the course because of that too. Yeah. So, and let me actually show you. I'll show you the other changes we're making really quickly here. I want to show you. I'm always very transparent. So let me do a search here on one of my guys helping me, who used to be my TA when I taught MBA school. Great guy. Here it is here. Yeah. So he sent me an email here, and I told him, what's it? Yeah. So in this document here are the changes we're making. Yeah. He wrote, private key doesn't show up. So the way it used to work was this. Okay. So Bitcoin on the left here, right? They used to show SHA-256. Now it shows NA in the corner here. So we're fixing it by adding what's called a lower third. And that's nerd videography talk for, in the lower third corner, we put a little box that says, this is not supply anymore. And we're making tons of other changes too, including updates to many of the links, etc. Yeah. All right. Next up, Dylan wrote, hey, Chris, can you please share your thoughts on what is happening with AMC? Is this similar to what happened with GameStop? Yeah. So what happens is you never want to, like, if you work in the hedge fund industry, a rookie mistake is to short a stock, meaning bet against it. A rookie mistake is to short a stock that has a high short interest. And what that means is this. And if anybody on this call wants to short stocks, please don't do it. Buy puts instead. Because when you buy puts, you pay this much. If the stock goes down, you make a bunch. But if you short, you pay this much. If the stock goes up, you lose tons more, right? You know, Warren Buffett said derivatives are financial weapons of mass destruction. But whenever you short a stock, or institutional investors do at hedge funds, the rookies will look at the fundamentals and technicals and all that stuff and say, oh, this is a great short, without looking at the short interest. What does that mean? Well, shorts can become very, very crowded. And the way you know if a short is crowded is if the amount of shares short out there divided by the average daily volume is above 10 days. I'll explain what that means. And you can get this data anywhere. So let's say that a stock trades 100 shares every day. And you see that the number of shares short is 1,000 shares. Well, if you take 1,000 shares that are currently shorted in the market, divided by the average daily trading volume of 100 shares, 1,000 divided by 100 is 10. That means that it will take 10 days worth of trading to get rid of all the shorts. Why is that important? Because that's a crowded short. And if too many people are short and something slightly positive happens to a stock, then there's going to be a short squeeze. Everyone's going to freak out and get out of their shorts. And so the magic number is usually 10 days, right? It's much, much higher with GameStop and AMC, though. It's ridiculously high. And by the way that you know that a stock has bottomed, any stock, generally speaking, is when that stock doesn't go down on bad news. Or if that stock goes up on slightly negative or neutral news. Because what happens is if a stock goes up, and there's a lot of manipulation that occurs, but if a stock goes up on neutral or slightly negative news, hedge funds freak out and think, oh my God, all the negative news is priced in. I'm going to cover and get out of the way. And that leads to a short squeeze. Yeah. And I can talk about exactly how shorts work in much more detail. It's something I did for many, many years at very big hedge funds and my own as well. Okay. So what's happening with stocks like AMC and GameStop is the short interest is probably high. I haven't seen the data. But anyway, that's what's happening. And then you also have a lot of, and people got to be careful about this, because you can get arrested for stock manipulation. Like if you say stuff about a stock and post it online and whatever, just be really, really careful, right? Ignorance of securities laws is no excuse. But what might be happening is there's a lot of retail investors that, kind of like the hedge fund mafia, they work together and they all buy heavily shorted stocks together, which causes, hedge funds to freak out, the big money, and cover, right? And they work together like a pack of hands. Yeah. All right, next up, Shock Rollo, how are you? Shock Rollo won my MBA degree program last week. Shock Rollo sent me a message on Friday, and it took me until Sunday to get back to him. I apologize for that delay. No excuse. I have to practice what I preach. Yeah. Thank you for that. But Shock Rollo wrote here, I'm in my final year of high school here in India. Oh, I didn't know that. Cool. And then 2 days ago, the government canceled our finals because of COVID. Yeah. Wow. And my Andrew and Matthew, they're my high school kids. They're still working from home here. And I think Andrew's about done now. Yeah. He just wrote his SAT. And then you wrote here, so I've got 2 to 3 months absolutely free before college. Fun. How can I make the most of my time? Thanks. Yeah. So what I would do is I would actually think about how to beef up your resume. And if you want, what you can do is you can intern at a company for free or for a minimal amount. And the way to intern is to have an amazing LinkedIn profile and resume, of course, and be able to network like a rock star. And if you go to my website, harounventures.com, you can download my networking book for free. And you can also get my complete job course for free. Just go to harounventures.com/ all lowercase, complete job. Yeah, and that will help. Or you can do a search on all the videos I have at the top of my website as well, because I have over 10,000 answers to all of your questions that I've done through YouTube Live. Yeah, and it's all indexed as well. It's fun. All right. And I would also, no matter what happens, this goes to everybody, I always want you to be starting companies on the side. Always, because, as much as I believe in capitalism and big business can work, whatever, companies tend to overhire and then they tend to overfire. They cut in the muscle, not just fat. And I always want you to have a plan B. And if you don't, you're not putting your family first. And so I want you to always be writing a business plan on the side. And failing to plan is planning to fail. And if you don't write a business plan before launching a company, the odds are it won't work. And I have a course called the Complete Business Plan course. And I also have something much more detailed and updated, which is called my Venture Capital Bootcamp, which is part of my MBA degree program. You can go to my website to learn more. Yeah, thank you. All right. All right, next up, Persona non grata. It wrote, Chris, in my countries, meaning Italy and Germany, I cannot find or buy TIPS, meaning Treasury Inflation Protected Securities. The ticker is TIP, right? You wrote, assume I can buy TIPS ETFs, right? If yes, which ones do you recommend? Thankfully yours. Yeah. So what I would do is there's a couple of great ETF companies that make very high quality ETFs. One of them is Schwab, right? Charles Schwab. I met him and his wife at a party here in Atherton. Good guy. He's moving to Texas, though, his company, for tax reasons. Another one is called Vanguard. Right, so try to do research on Vanguard's website on ETFs. And I'll show you really quickly. And for those of you not familiar with ETFs, ETF stands for Exchange Traded Funds. And what that means is it means a collection of stocks at a very, very small fee that represent an index. So for example, you can buy the SPY, that's an ETF, okay? And the components of this ETF here are the 500 stocks that make up the US economy. Okay, and so you go here to holdings and you can find out the breadth and depth of what's held here. You know, the biggest components of the US economy is, of course, tech right now. Where the hell is tech? Oh, down here, yeah, 23%. And if you scroll down, these are the biggest components here. Now, before you buy an ETF, you have to make sure that the expense ratio is small, right? Meaning the fee to own it, like way less than 0.5%. This one here is 0.09% every year. You're going to pay 9 pennies every year for every $100 worth of this ETF you buy. Okay. You also want to look at liquidity, okay, to make sure that it trades a lot every day and you can get in and out if need be, right? So this ETF, the S&P 500 ETF, SPY, this ETF trades 83 million shares on average every day at a price of around $420. So you can get in and out quickly, no problem. Now, for doing more research, you can type here just ETFs and look at the ETFs for different, different sectors, like the OIH, which includes oil drilling companies like Transocean, ticker RIG, coolest ticker ever, Schlumberger, ticker SLB, etc. Now, I also recommend going to Vanguard's website. And when you're at Vanguard's website, you can actually read more about these ETFs, the investment offering, etc. They've got a wonderful website here. You can look at all types of ETFs, and I'm sure there's a bond ETF here that might contain tips as well for you. Yeah, so I would check that out. So government bonds, like if you buy government bond indexes, United States government bonds, the return is very low because it's low risk. If you buy corporate bonds, right, it's higher risk. Yeah. And if you have questions about any of the ones you look at, please let me know. Thank you. Okay. All right. All right, next up, I've got Vinayak. Hey, Vinayak, welcome to the call. I haven't seen you before. I hope you join us again. So Vinayak wrote here, in a recent video, you discussed about free education in America and its benefits in the long term. You also said that you're a capitalist. I'd like to know your explanation on capitalism and socialism. Yeah, sure, absolutely. So first of all, before I go there, for my entire life, since I was a baby and President Nixon was president, for my entire life, the whole world has been moving, and this is a good thing, from socialism to capitalism, right? So on a political spectrum, the way it works, left wing, of course, means communist. Right wing means I love business, okay? So my whole life, the whole world's been moving this way slowly, which is a good thing because you get freedom of speech, freedom of the individual, etc. Then what happened was, given COVID, that countries are starting to lock down and take away fundamental freedoms, which is total BS, right? And the problem is that governments like control, and it's tough for any political party or person or entity, once you have control, to give it up. Let me explain what this means. Well, I won't mention which students of mine, but when COVID first hit last year in 2020, I had students reach out to me and say, sir or Chris, it's terrible. They're beating us with sticks if we go outside. Our freedoms are being taken away. And even in Canada, my beloved Canada, where COVID has been brutally managed by Trudeau. But in Canada, my brother was telling me that, at a certain point, if you went out in your car and there's more than one person in the car, they'd fine you $150 a person. Really? You're going to fine us for going outdoors? And I wanted to go visit my parents last year in Canada, and the Canadian government, basically it said on their website that you will get a $750,000 fine and go to jail for 6 months if you come to Canada and don't quarantine for 2 weeks. That's harsh, man. That's harsh. And that's left wing, and I hate that. And so one of the things I love about the United States, and the U.S. has problems too, is America's land of extremes, right? And some of the extremities are kind of scare me. But there are certain extremes that keep the government in check, right? Like, for example, and you got to remember that the United States was kind of formed out of revolution and not out of evolution like Canada, which is kind of like British monarchy, but that sort of thing. So the United States, basically, the way it works is hundreds of years ago, you had a lot of people come from Europe to America, and they created the greatest hits of what they believe worked in Europe, and then they added more freedoms, right? And the way to get the entire country to come together and form America, the 13 states years ago, hundreds of years ago, was to basically say, okay, every state has their own rights as well. And this keeps the government in check. And one of the states, New Hampshire in the Northeast, on their license plate, I love their license plate, it says, live free or die. I love that. I love that. I think that if more countries, moved a bit more right-wing, not too right-wing, but just less socialist, then I think that the world would work much, much better. I really do. Because if you live in a country where there's socialism, and God bless you if you do, if you live in a country where there's socialism or even worse, communism, it's hard to work hard and be recognized for your efforts and benefit and enjoy the fruits of your efforts, your labor, so to speak. Yeah. So in terms of my political affiliation, humbly, so I'm definitely a capitalist. Am I a Republican or Democrat? It all depends on who the person is that's running, right? I don't have affiliation for one party. I basically vote for whoever I think is best for the country longer term. And you might call me a libertarian. And if you want, you can read stuff from Ayn Rand. It's hard for me to understand that stuff. She's so smart. But I'm a libertarian. I believe in freedom of the individual. And my favorite type of student, my favorite type of customer, are the customers, my students, that are poor, smart, and hungry. They were maybe born with a crappy set of cards in life, but they're willing to work hard to be able to improve their lives and make their dent in the universe. That is what drives me. That is what drives me. Yeah. I believe in freedom of speech, of course, as well. But I am worried that the world is moving a little bit more left-wing. And when the world opens up, I hope that all of these fundamental freedoms that have been taken away from people are restored. Yeah. Yeah. All right. Next up, Ferris wrote, hey, Chris, I would like to thank you for the crypto course. You're most welcome. Thank you. And I'm sorry about the typo that somebody brought up earlier with respect to SHA 256. And of course, we're fixing it. Kevin, how are you, man? It's been a while, buddy. I hope you're doing well. Next up, we got Mark Satones, who lives in Detroit. He's one of my amazing MBA students. This guy has got the coolest business plan, right? It is so forward-thinking. He's like Elon Musk meets Captain Kirk. And so Mark's business plan is this: asteroid mining. Awesome. Because what's going to happen eventually is kind of like the movie Dune or the book, and they're making a new version of Dune soon, coming out later this year. What's going to happen is eventually we're going to be mining resources not on this planet. I know it sounds out there, but it is coming eventually. It is. For example, on Jupiter, this is out there, but it's fun to talk about. On Jupiter, it actually rains diamonds. Yeah. So Mark wrote, hello, brother. I hope you had a stellar holiday. I did, and thank you for all the icons. God bless you. What is your take on buying businesses when the owner wants to retire and sell? Yeah. So if it's a private company, I recommend doing your own due diligence and valuing the company based on an earnings multiple or EBITDA multiple, which is like operating profit, an earnings multiple that is at a discount to the sector average, meaning the average of other companies, right? I would also have a forensic accountant hired, to do consulting work for you, to look into the accounting books, because you don't want to buy a lemon. That's what I would say. Yeah. And what you can do also is, Mark, in the MBA degree program, as you know, and let me go to the top. I've never done this before, but I'm going to go up to the top screen here, and give me 1 second. I want to show you how to actually assess a company. 8 million keyboards here. Here we go. Let me hit go over here to Excel Hell. Here it is here. Yeah. I'll just make this full screen. But in the MBA degree program, there's this investment research dashboard, okay, right here. And it's 100 steps, and it's hard for you to see right now. So give me 1 second. What I'm going to do is I'm going to make all the sheets really, really big so I can show you what this means. Yeah. So what you can do, and let me select all sheets and make it 115%, I think. But what I recommend is you go to this and ask me during office hours as well. And when you're in this sheet here, I want you to answer every single question about that company you're considering buying. Okay, and so there's 100 steps with many questions as well. And so at the top here, I'm kind of small in the corner there, mini me. But in the top there, you've got qualitative research progress. Okay, then you've got quantitative research. Then you've got financial research. And all these things, and I start this at the beginning of the fourth semester. Okay, EMS 4.2 to be exact. Economics Management and Strategy, Class 4-2, fourth semester, Class 2. I show you a bunch of charts I make, and this is just dummy data here. And what also comes out of this, if you answer all the questions, right, is right here, an executive summary, which some of you recognize from my other course. But what I've added also is a detailed report that gets created for you, which is 150 pages research on this company, right? And I've never seen something like this created before. Humbly, I worked very, very hard on it. There's no macros. I don't believe in macros because it runs code. But I really think this will help you cover everything. And let me make my face a bit bigger in the corner there. Yeah. And if you have more questions about this, let me know. And thanks as always. And I'll see you in class, buddy. Yeah. And always ask questions here too if you have them, please. I'm here for you. Thanks. All right. Let me go over here. All right. Cool. Fun. All right. Next up. Get the right keyboard here. Okay. Next up, Shri Navas. Shri is saying, "Hi, Chris. Hope you're doing well. Likewise. Hope you're doing well." And I had actually an intern named Shri Sundaralingam. Great guy. He went to University of Waterloo. Who's my intern when I worked at Accenture years ago. Good dude. I think he's here in the Valley now. Next up, we got Jay Friedman wrote, "This is a great addition. Thank you." Thank you. Appreciate that. And I'm trying something a little bit different, as you know, with this news segment as well. And when I make these news articles, what I do is I always ask myself 2 words. So what? And I say so what because the so what answer for me is, what is this adding to my student? You know, value. How much value am I adding to you to help you take your career to the next level or to be able to invest better? That sort of thing. It's been fun. Yeah. And it's going to get more and more professional. And our goal is by the end of the summer to have a better look and feel than CNBC has. And we're going to make it happen. I've got new lights coming in, equipment, all that stuff. Yeah. My hair's a little bit shiny here. Yeah. So I'm still making mistakes. All right. Next up, Srinivas is saying, my question is, to have professional growth, we need to step out of our comfort zone. But when we do and take on a new role, the initial phase is very hard. How do you get over that and become good at a new role? Yeah, you need mentors and lots of them. You know, kind of like Luke Skywalker had Yoda. You need to find your Yoda as well. And the best type of mentors are people that have something in common with you. You know, maybe they went to the same high school as you and they're from the same part of the world you're from as well. And the way to find them in your company is to do an advanced search in LinkedIn and find people with those qualities. Or let's say you don't work in a big company, but you want a mentor from another company to help you out. I tell you exactly how to do this. All you have to do is go to my website, and you can actually download a course for free right here. And I don't know how much longer I'll make this free for, but it's fun. And you type in a complete job, all lowercase. And what you can do is download this complete job course. Or what you can do is on my homepage, you can scroll down and download my book for free on how to network, because relationships are more important than product knowledge. Now, I've had students complain to me that I mention this too much, which is why I don't mention it that much. I also had students complain to me that a while ago, I sounded tired on my webcast, right? And one data point doesn't make a trend, but a couple do. And so a bunch of people complained, so I decided no more chair in my office ever again. There is no chair in this office. Also, what I do, and you guys can do this too before an interview, is I take a lozenge before I go live, because I go live pretty early in the morning on Thursdays. It's called Vocal Zone, and it makes me sound less tired and stuff. Yeah. Okay, next up. Jamba wrote here, hey, Chris, good to see you. Likewise. First time I've seen you on the call. I hope you join us again, Jamba. Thank you. Okay, E. Pronto is saying, hey, Chris, what is your opinion on government bailing out companies like Air Canada, E. Pronto from Toronto, and the company executives receiving large bonuses approved by the board? Needless to say, the public is fuming. Is this ethical or not? Yeah. So it's tough because I do believe that the role of government in capitalist countries like Canada, which I hope moves a little bit less to the other side, not too left-wing. But what happens is the role of government in capitalist economies is to make sure, partially, that business runs smoothly. And if companies go bankrupt, then there are fewer jobs. And so every now and then you do need a government bailout. And so what happened in the United States in 2008 was GM, General Motors, almost went belly up. And so the government bought part of the company to help out. And that's why we called them government motors for a while. And eventually the government unwound those positions. And so I think it's okay for governments to help out temporarily, but not at the expense of the public. And what sickens me, really sickens me, is what happened in 2008 in America. In 2008, we were within 24 hours of bank machines not working. I lived in a town then in California called Burlingame. And the people on the left of us, they foreclosed their house. And on the right, foreclosed as well. Right? It happened all across the country. And it was the bankers' fault for using derivatives and complex products, which I'll explain in my upcoming complete options and derivatives course. And Warren Buffett calls derivatives weapons of mass financial destruction. And so what happened was the government, they bought a lot of debt from these banks through what's called the TARP program, Treasury Asset Relief Program. And then what happened was once all these banks were bailed out, right, in 2008, then 2 years later, the bankers at these companies paid themselves all record bonuses. Meanwhile, the average schmo on the street in America, right, this is heartbreaking, lost their house. It's not fair. And so I do believe in little government, like Reaganomics. Ronald Reagan's my political hero. But I do believe that if you're given a handout by the government and you're a big company, you pay it back and then more. Otherwise, what happens is there's a moral hazard and a safety net in place. And you can be reckless with derivative instruments or running your company and the government's going to bail you out anyway. Now, Air Canada is a little bit different in Canada because Air Canada used to be classified as a crown corporation, right? The crown because it's the ties to England, the Commonwealth. And so Air Canada was owned by the government for a while, right? And so, yes, I believe they should be bailed out, but I don't think that the board or any employees there should get record bonuses ever, and they should pay back that loan always. Yeah. All right. Next up, hey, Hisham, how are you? Hisham used to work with me. He's awesome. He's one of my students from San Francisco State when I used to teach here in the evenings. He's amazing, really, really good guy. He took some time off to go to Pakistan. He's not working with me anymore, and he got a job actually working at Amazon. Good dude. Hisham, good to see you. So Hisham wrote, good morning, Chris. Hope you're well. Thanks for answering my questions a couple of weeks ago. I also miss working with you. I miss you too, man. I miss you too. Yeah. And keep in touch. Yeah. Okay. Next up, David Yurman. And I smile whenever I see your name because my wife bought a fake David Yurman ring years ago. So David Yurman wrote, looking sharp today. IBM Power Blue. What is IBM? Is that industry's biggest mistake? Or I've been moved? Itty bitty machines? And you wrote, I always hate how my collar never stays in place. Okay, what I do for this, by the way, is you have to, when you're doing something on the air like this, you have to keep, and wrinkled there, but you got to keep it always buttoned. Because if you don't keep it buttoned, what happens is the collar comes out. Oot, as we say in Canada. Yeah. All right, next up, Mohammed wrote, hey, Chris, I'm taking your investment analyzing course on Udemy. Thank you. And then you wrote, it's fantastic. Hopefully I'll use it to get a job in the sector. Yeah. Thank you. I'm glad you're enjoying it. And I'm so sorry for all my awful dad humor. Yeah. In the course. Shock Rollo is right. Earlier on, when I was talking about McDonald's increasing their same-store sales every year, I mentioned a quote from a movie. And that quote was, would somebody get this kid a Happy Meal? And I asked what movies it's from, and Shock Rollo got it. It's Big Daddy. And Shock Rollo won my MBA degree last week as well. He's on the ball. Yeah. Moving on to Thomas. Thomas said, "Hey, Chris, I highly appreciate the fantastic job which you do on education. Thank you." You wrote, "I love it." And then you wrote, "How do you do looking at investing in how do I look at investing in Bitcoin?" Yeah. So I pride myself on teaching my students how to fish instead of giving them a fish. And as a way to do that, I give my students a lot of different tools in their toolbox or arrows in your quiver, okay, in terms of giving you these big frameworks. And so one of them is called my 49-step framework for cryptocurrencies. And you can get that in my cryptocurrency course, and in my MBA degree program, I have a much more elaborate and updated version of that too. And that 49-step framework I created based on looking at IPO prospectuses, meaning S1s. Before a company goes public, they have to file an S1 so that you can read all of the risks, et cetera. Investment bankers write these things. So basically that 49-step process for cryptocurrencies that many of you know about from my crypto course, I created and tried to make it similar to an investment banking S1 prospectus, because that doesn't exist out there. And it angers me, it does, how many people are getting scammed when it comes to cryptos. And so hopefully by doing your own research, using my frameworks, the probability of you getting scammed goes down, and the probability of you making money hopefully goes up a lot as well. Yeah, thank you. Okay. Next up, Amin wrote, "I'm about to start my own business, but I'm afraid that it might not work out." Yeah. So what I would say is failing to plan is planning to fail. And what I want you to do is I want you to check out my complete business plan course, which will help you write a business plan. It's only 9 hours, right? And I also gave you a ton of frameworks in there as well and templates. And in my MBA degree program, I have something more elaborate than this, which is part of what I call my venture capital boot camp. Okay. And basically what that means is in the third semester, in the first 5 classes of semester 3, entrepreneurship 1, 2, 3, 4, 5, I put you through a boot camp. And I've guest lectured and helped out on panels and picked companies at Stanford University Graduate School of Business many times in classes there. And so I have a lot of experience with that. I've invested in 500 startup companies. I've gone to boot camp events there too. I've been on the advisory board of Plug and Play Tech Center as well. And so all that stuff I learned about venture capital boot camps and helping companies grow and thrive, I include in the third semester of my program. Yeah. And to get more details on this in general, and all my courses have a 30-day, 100% money back guarantee. Go to harounventures.com and then click here. And then what you can do, and I'm logged in, so the data's a little bit different here, but you can see my MBA program here and all my courses as well. And here's the business plan course as well. Yeah, I had fun using Photoshop making that. All right, let me go back here to the next question. Thanks. Okay. All right. Next up, Ugo wrote, "Hey, Chris, I'm glad to be back here. Thank you. You wrote, hope you're well. Thanks for continuing to be a blessing throughout the many lessons you teach. Keep on edutaining the world." Thank you. God bless you. Thank you. I appreciate it. And years ago, I worked at a hedge fund called Citadel. And my boss said to me once, he said, "Chris, if you can't explain it, you don't understand it." And so I have to thoroughly understand something and enjoy something before I teach it. And I've got a lot of new props for my upcoming my upcoming complete derivatives course, including wheat futures options, Wheaties, ticker GIS. You'll see why I have this. And I get these props, as many of you know, from eBay. And what you can do is, for your speech, you can rent a prop, or basically buy a prop on eBay, right? Something historic and fun. And then after you're done the speech, sell it back on eBay. So it costs you net 5% fee or whatever it is. Because when you present, and we all remember when we were younger in school, when you present, we always remember the objects, because we're visual, that people bring, like show and tell. Like when you're a kid, you remember, the items people brought in for show and tell, but you don't remember what the teacher said. So I try to be visual. Yeah. Thank you. And it came from frustration too. I got a D in accounting the first time I took it. I thought my life was over because I was memorizing stuff and not understanding it. And when you understand business concepts, you can enjoy them. Yeah. I certainly enjoy this. Okay. All right. Next question is from Shock Rollo, who wrote, "You said you started your own hedge fund. Why do you close it down?" I morphed it into a venture capital firm. And then I got a great offer from another venture capital firm to work there. Yeah. And I wasn't happy doing it. And I thought I was clinically depressed. I really did. And throughout my life, I thought I'd been clinically depressed. I'm always transparent and honest. Why? Because I'd worked so hard to get a job and I'd changed careers. And my happiest day was always day one. I worked hard to get in the consulting industry. My happiest day was day one. Then I went downhill. I worked hard to get to Goldman Sachs. My happiest day was day one. Then I went downhill. I worked hard to get in the venture capital industry. My happiest day was day one, and I went downhill. And I remember I was in New York City, and I wanted to make more money, which is terrible. And so what I did was I moved to the West Coast, and I worked at a hedge fund, started my own hedge fund. And I was miserable. And so I thought, my goodness, am I clinically depressed? What is wrong with you, Chris? And so I realized that I hated it. Like the whole notion of making money when stocks go down, when people lose their jobs. Like for me, for example, in October of 2008, when the market was down a lot, we were up a lot in the fund. We made a lot of money. And it felt scummy coming to work every day and hoping that banks would go out of business. It was just wrong. And it was short-term focused too. And so I morphed it into a venture capital firm where I had an investment in my fund in Facebook when it was private. And I was happier doing venture capital because I was long-term focused. But I wasn't fulfilled. And so I started teaching and I was like, oh my God, I feel the sense of happiness like when you hold a baby for the first time. I was so happy. And I was like, screw it, let's do it, as Sir Richard Branson said. And I just started teaching. It was never about the money. I just love doing what I'm doing. All right, next up, question is from Harsh, which is, how do you do proper research on an industry and find an opportunity? Well, what I would say is when you do research on a company, you've got to look at fundamentals first, then valuation second, then distant third is technicals. Now, when you look at a sector, you got to see the forest from the trees and understand the size of the market, which we call the total addressable market. Never start a company in a tiny market, ever. Because if you get 100% share, which is almost impossible in a tiny market, so what? So I start top down. I look at the drivers of the sector as well. Now, this week I opened up, my first topic was talking about same-store sales for McDonald's. When you look at different sectors, you have to understand what the one driver is to make those stocks go up and down. With restaurants and retail companies, it's same-store sales. With hotel companies, it's RevPAR, which means revenue per available room. With the commodity industry, of course, it's the price of commodities, that sort of thing. So once you do investment research on a sector, you'll narrow it down to one and sometimes two things that make the sector go up and down. And I provide you with a lot of tools to do that, or arrows in your quiver, so to speak, in my MBA degree program. Yeah. All right. Next up, Mr. Invisible wrote, hey, Chris, do you have a SWOT analysis in your MBA program business plan? And how do you teach how to sell using copywriting? Yeah. Part of it is that. Yeah. So let me show you. And this is not from the business plan portion of the MBA degree program. But what I want to do is buying time here to find myself. Here we go. Good. I'll show you right here. So when I have you analyze companies, this is part of my MBA degree program, I have you look at qualitative stuff, quantitative stuff, and financial stuff as well. And this might be tough to see, but over here is the SWOT framework, which is step 37. So if I click on it here, what you'll see here is you answer questions like, what are the strengths of the company, weaknesses, opportunities, and threats, etc. Right? And this is for analyzing a company or a sector. I have another template, which I have open right now, which is the venture capital bootcamp portion, which goes into much more detail about SWOT analysis than this does too. Again, for those of you not familiar with what SWOT means, it stands for, look at me buying time trying to change screens. It stands for strengths, weaknesses, opportunities, and threats. And whenever you're in an interview situation, and you're not sure what to say next, and they give you a problem to talk about or case study. You can always buy time by saying, well, let me look at this from a SWOT analysis perspective. Let me first of all kick it off with the strengths. The strengths are yada, yada, yada. Then you use transition words like this. Moving on to the opportunities. The opportunities of this company are yada, 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 or weaknesses, threats, that sort of thing. And the reason why you have a framework like that and you mention it is it buys you time to think of the answer. Kind of like when a teacher reads a question or basically repeats the question. They're buying time to think of the answer. And by using a framework like SWOT and many other frameworks I give you in an interview, by using frameworks like that, it makes you look much more structured, methodical, and thorough in your approach to analyzing business problems. All right, Heathens Nation's music. And yes, Heathens Nation music. Remember, we talked about this months ago. Everyone deserves a second chance. And I'm with you, and I love you. So Heathens Nation's music wrote, "Happy Thursday. Hope everyone is well. Likewise. Do you still drink green shakes? If so, how do you prepare the shakes for the week? Thanks." Yeah. So I am a biohacker. I have been for years. I change my diet around so I can get more energy. And so I start out in the morning with bulletproof coffee, which I've talked about before. I can go there again if you want me to. Then what I do is I have you won't be able to see it here, but this here is a lot of kale, raw ginger root, and many other antioxidants, all liquefied. Okay. Then what I do after I finish this, before I do my one-on-ones with students later today, I run upstairs to the fridge and I grab a shake I prepared the night before. And that shake is basically, it has all the fiber components in it as well. It's a Ninja Bullet, right? And so it's basically just this one big antioxidant drink, which has kale as well, but not in liquefied format, etc. And I also try to drink this as well, right? This is like, I don't know, 2 liters or something. And you can see the times right here as you drink it, right? And so it's 10 a.m. right now, my time. This says 9 a.m., so I'm behind schedule. And all this stuff, this, as well as my vitamins and the other Ninja Bullet products I prepare the night before, put it in the fridge or by the coffee machine. So when I wake up, everything is ready. Yeah. I'm very regimented. Yeah. Too much sometimes. Okay. Next question is, David Yearman wrote, "Chris, you got me taking notes today. Damn, you're good. Thank you." And you wrote, "Love Kanye. He's a magical genius." He really is. He really is. Yeah. And I have this 11-year-old, Dylan. And it was last year. I was preparing for one of these webcasts. And he heard me rapping. And I was rapping, basically, I had one of Kanye's songs, the instrumental version, and I was rapping a lesson, teaching it. And he walked in, and his face turned white. His mouth was open. He said, "Dad, if you do that on YouTube, I'm never talking to you again." So I scrapped it. Yeah. But I believe he is a magical genius. Yeah, misunderstood too. Turning Nerd said, "Be different always." I love that. It was one of Kanye's 9 principles we talked about today. I agree. And Mr. Nobody is saying, "Hey, Chris, hey. One of my college professors told me that cryptocurrencies are just technology decentralized, but they are behaviorally centralized." Well, the reason he told me that, because we humans generally seek validation from others, especially from an authoritative figure, which further dictates the actions. Yeah. So what I would say is, with cryptocurrencies, there's no authoritative figure out there doing that, because cryptocurrencies are not, governed by the Federal Reserve or the Bank of Canada or Bank of England or the European Central Bank or the MOF, Minister of Finance of Japan, etc. Instead, cryptocurrencies are governed by the laws of mathematics, right? So there's no authoritative figure out there. Yeah. But in terms of decentralized, yes, cryptocurrencies are decentralized because they're virtual. They exist on the internet on a blockchain, right? And they all have their own blockchains. And you can actually download the entire Bitcoin blockchain on your computer if you want to, but you got to have a ton of storage. And that blockchain has been replicated on many computers worldwide. It is very much decentralized, but it can be centralized to the extent that you can download it as well. Yeah. All right. Next up, Dan wrote here, hey, Chris, first time I've seen you, Dan, on the call. I hope you join us again. Thank you. Yeah. So Dan wrote, hi, Chris. I've been following your YouTube videos in the last few weeks. I find you ethical, authentic, transparent, and a person of high integrity. God bless you. Thank you. God bless you way, way more. I appreciate that. Thank you. I'm so transparent, a little bit too transparent. Yeah. But Wissawig, what you see is what you get. Yeah, for what it's worth. Thank you. Gupri wrote, nice suit, Chris. You're looking great. God bless. Thank you. I appreciate it. And a buddy of mine named Scott Cochran, who's a senior sales executive in software at a company called Splunk, ticker SBLK. He took me to meet this man, Sam Malouf, in Burlingame, and he hooked me up with clothes. I'm hiding the wrinkles here, though, right? Yeah. But I got to keep it buttoned up or the collar gets all messy. Yeah. And I even had it tailor made. You see how I'm slumping a bit like that? I'm trying to get out of that like that, and you can change your posture. Yeah. All right. Next up, Akazan is saying, hey, Chris, I have a weakness of not being very confident in my actions. Do you have any advice on how I could become more confident? Thank you very much in advance. Yeah, absolutely. And let's do something fun here. I'm going to help you improve your confidence. This will be really, really fun. All right, so here's what we're going to do. What I'm going to do is I'm going to go here to PowerPoint, and I'm going to wing it as I always do. Okay, so confidence is something that is in your mind. Okay, like the Rodin sculpture, I think, therefore I am, which is also a nice line from a Billie Eilish song. So what I'm going to do is I'm going to introduce you to a chart that will change your life. Yes, I've shown this before, but it's worth looking at again. So this here is age, and this here is give, I'm not going to swear, a damn. I don't know why there's an N on the end of damn. So when you're younger, you're whoops, give a damn. Yeah. When you're younger, you're down here. Okay. You don't care what people think of you. You know, you have meltdowns in restaurants, whatever. Then when you're older, you're here. Okay. And you also don't give a damn what people think of you. The problem is when you're in your 20s, 30s, and sometimes 40s, you're up here. You give a damn what people think. And I call this here the triangle of despair. And you need to avoid this no matter what. Okay. And the best entrepreneurs in the world, what they do is they live at this level here. And they always have. They don't give a damn what people think of them. You know, Steve Jobs, God bless him, he used to show up at Atari or Activision where he worked. And, you know, he never showered. He had long hair and all he ate were carrots. And so he literally turned orange. I'm not saying don't shower, but he didn't care. The same thing with Kanye West. He doesn't give a damn what people think. You know, he's not there to impress other people. He's there just to speak his mind and be himself. And that's why he's so successful. And professional athletes too. They don't give a damn what people think of them. You know, if Wayne Gretzky got on the ice every day and he thought about what the fans were thinking, he wouldn't be able to focus on his awesomeness. He never cared. And you got to tell yourself that too. Like, you got to tell yourself, I don't give a damn what people think of me. I'm not saying be rude or disingenuous, but you got to do it that way. All entrepreneurs are like that. You know, Mark Benioff, brilliant man, great humanitarian. I've met him before a bunch of times. He actually, he started Salesforce.com, the biggest employer in San Francisco. And I used to work in his building. And on the public, main floor, the public lobby, he used to walk his dog, his beautiful lab, in bare feet. He didn't care. Nobody cares who's successful. So the second you start living your life at this level is when you reach this awesome level of nirvana or happiness, so to speak. And you're not anybody's, I'm going to swear here, earmuff, sorry. You're not anybody's bitch in your own mind. You don't care what people think. You don't mind failing. Because if you fail over and over and over again, you get closer to success. And you only have to be right in business one time. So try it. Try living at this level. Be yourself. It's kind of like when I used to go to interviews and I couldn't get a job. And then I went to that one interview, and you've all been there, where you're frustrated and you're just like, you know what? I don't care. I'm just going to be me. And you chit-chat about sports or life in general, and you get the job. It's because you're being you. It's easier to be you. It's therapeutic as well. And it will help you reach your full potential in life. And it will give you unstoppable confidence, as Tony Robbins calls it. And I met Tony as well. He invested in one of my companies. Great guy, great humanitarian as well. So here's your homework. So let me delete all this stuff here. Please work. These are my notes before I start my call. Sorry. Now you could pause and see all my insecurities. Here's my homework for you, okay? My homework is this. I want you to do this 10 times, okay? I want you to write this down, and this will make you a happier person. I promise you. I want you to write down this. I don't care. Do this with me. About X. And I want you to do that 10 times for 10 different things. You know, I don't care that people think that I'm an idiot because I'm a 50-year-old man-child and I wear the cheapest Yeezys out there. They're so comfy. Let me put it back on. I don't care what people think of my hair. I don't care what people think of my new crazy clothes. I don't care that I almost wiped out there. I don't care. I'm more likable than that, right? I don't care. And you got to tell yourself the same thing as well. I don't care. And once you do that enough times, you'll have the freedom to be you. You'll have the freedom to live your life on your own terms. And never again will you have confidence problems. Ever. All right. Get some coffee. All right. Next up, Harsh is saying, what are your thoughts on SoftBank competing companies going bankrupt like Katera? Yeah. So for those of you not familiar with SoftBank, it's founded by this brilliant Korean man who lives in Japan named, I'm buying time to think of the answer, named Masayoshi-san, right? And he owned a big stake in Yahoo Japan as well. And what SoftBank has done is they've kind of branched out and become like a venture capital firm. They invest in a lot of startups like WeWork and many, many others. And as with most venture capital firms, like 95% of the investments go to zero. You know, all you need is one or two investments in a portfolio to become unicorns or billion-dollar companies to generate a lot of money on that fund. So the fact that he's got exposure to a certain company, which I don't know much about, that went belly up is nothing new. It happens all the time. Yeah. And the best venture capital firms on the planet, the top 10 on the planet, the Kleiner Perkins of the world, Andreessen Horowitz, 1% of their investments are unicorns, billion-dollar companies. The number one venture capital firm on the planet is called Sequoia, and 5%, this is amazing, 5% of their investments are unicorns. So it doesn't matter if you're Sequoia, Kleiner, SoftBank, whatever, most of your investments are going to zero. Yeah. All right. All right, next up, Mr. Invisible wrote, what is the best finance career or side hustle when graduating from your MBA program? Yeah. Whatever you're most passionate about when it comes to finance. Whatever you're most passionate about. In terms of side hustle, I actually had one of my students, his name is Julian. I'll probably bring him on and interview him next week. He started this company with his son, right? So Julian's he's based in Stuttgart, Germany. He's from Sofia, Bulgaria originally. And he and his 14-year-old son, Martin, started this great company called Grizzy. And you could find them on the web. They have a really amazing website, and they make these awesome hoodies. So he started his own company. This is just an example. Very high quality as well. And I'll bring him on. I'll interview him maybe next week after. So there's that. I have other people like Connor Byers in my class who, got a job at Boston Consulting Group. So there's a mix of people that go to work in other companies or start their own companies as well. Yeah. So there's something there for everybody. And when I do when I teach the MBA program, I should have worn my headset so you can hear me properly. I feel like I'm a waiter. Okay, and this is where I proposed to my wife Christine in Paris, Maxims, and that was in 2000, year 2000, on June 3rd. And so today is my 21st anniversary. Yeah. But when I teach, I feel like I'm a waiter, right? And so I'm a waiter. I give you access and expose you to all the items on the menu, and you pick what career you want. And if you order the souffle, it takes 20 minutes longer, so you got to order it early. Yeah. Yeah. But anyway, that's it. Oh, what movie is this from? What is the soup du jour? And the waiter goes, that's the soup of the day. And then Jim Carrey goes, that sounds great. I'll have that. Thank you. Yeah. It's from the best movie ever made. I've seen 8 million times. Yeah. And I know every line from it. All right. All right. Next up, Albus is saying, hey, Chris, what are some of your favorite blog websites? Yeah. I don't really have any. I guess Gary Vaynerchuk. I follow him on social media. And by the way, for those of you not familiar with Gary V, the guy's amazing, right? He's a little direct, which rubs people the wrong way sometimes at first. Then you grow to love him because he's transparent and just him. And the way to know what social media platforms you should create or put your content on is don't learn from me. My dad always told me, only take advice from successful people. So if you do a search for Gary V, and go to his website, and if you scroll down, you'll see here all of the social media platforms he's on. Okay, and you want to make sure that it used to have at the very bottom down here. Yeah, actually go down to the bottom right here instead. Okay, whoops, and whatever order he has these social media icons in is the order you should consider as well. And so he's very big on Insta, YouTube, of course, Facebook, Twitter, Snapchat, which I haven't figured out yet, as well as LinkedIn and last year podcast, right? And he got rid of the ones that suck like method, as did I. And so these are the social media platforms you should consider using in this order. Yeah. Yeah. And I think that like blogs are kind of dying out. He's got his own blog here as well. It's video is so much easier, more fun to watch, right? So yeah. And I have if you go to my website, I've got a blog here as well, or I used to. You can search for anything here. So if you search for Apple and you spell it wrong even, right? Because I make a lot of spelling mistakes, it'll basically give you every time I mention Apple in any video I've ever done. Also where I mention Apple in my MBA degree program. And then here, you'll find blogs. Like, for example, this here was a blog I used to have in 2015. And I wrote this article that was in Inc. magazine. Look at this, man. I screwed that up big time. Success equals Apple's simplicity plus Intel's paranoia. And so I used to do these vlogs here. And then what I did was I turned my vlog into a book, blog into a book called The 101 Crucial Lessons They Don't Teach You in Business School. And you can all write your own book. If you want me to talk about how, I'm happy to go there again. I mentioned it before. Yeah. All right. Okay. Next up, David wrote, happy anniversary to you and Christine. Get out of here early and do the hubby thing. Thank you. I will. So we're going to go out to dinner tonight. After I finish work. I don't have work. I have a passion. Yeah. Thank you. All right. Next up, Jitendra wrote, hey, Chris, I've completed my bachelor's degree. I don't have confidence to go for a job or start a business. I get nervous whenever I go for any interview and get rejected. Should I go for the MBA? Yeah. So I recommend, so let me talk about traditional MBA programs. Let me talk about mine. Okay. So I recommend setting up 100 informational meetings if you want to change careers. And after doing those 100 informational meetings, if you don't get the job of your dreams, maybe go get a traditional MBA from a rip-off school. Okay. Why 100 meetings? What does that mean, Chris? That's kind of excessive. Well, think about each meeting you take. as saving you $1,000. So 100 meetings times $1,000 is $100,000. That's how much a traditional MBA costs. So, and let me turn the volume down a bit here. I think I'm clipping slightly. Test, check. Yeah, I think very slightly. Yeah, that's how much a traditional MBA costs you. Or you can take my program, where when you buy my program, it basically costs you the same as 1 or 2 hours worth of MBA at a traditional school. You have lifetime access to my program. It's always going to be updated. I always add new content to it every year, tons of new stuff. You can watch it from the comfort of your own home. And there's a 30-day, 100% money back guarantee. In fact, you can take the program, finish it in 29 days, and get your money back. I don't care. Yeah. Now, in terms of your question about confidence, just rewind this video and watch that chart that I just showed you. And that will help to improve your confidence, so to speak. Yeah. Okay. Next up, we got Roberto, who's saying, good morning, Chris. Good morning to you, too. How certain are you that universities will go belly up, as you said? If so, there would be a huge problem with laboratory portions of courses in sciences and engineering. Yeah. So I think what COVID has taught us is that you can learn from home. My hanky is getting lost again here. I don't know if I should have the hanky or not, but COVID has kind of proved to us that you can do work from home, and you can do school from home as well. And so I think a lot of people are going to realize post-COVID that why do I spend $100,000 for a 4-year undergrad when there's only 13 hours of class a week and I can't get my dream job? What a waste of money. Now, I think people are still going to go to universities in the future, but instead of 4 years, it'll be truncated to 2 years. And what people will do is they'll actually do it from the comfort of their own home. And I don't think that science-based or medical-based universities are going away anytime soon. You know, you do have to get a degree to be a doctor. Although my favorite charity I'm on the board of is called Doctors Without Diplomas. But that was a joke, sorry. Which I got from Zach Galifianakis from Between Two Ferns. You do a search on that, you'll laugh your ass off. So I do think that medical-based programs will still be around forever, as will law programs, unfortunately. But I think what's going to happen is people are going to say, you know what, man? I'm not going to go to university in the future unless I get into a great school like Harvard or Oxford or whatever. That's what people are going to say. I really, really believe that. And so what's going to happen is fewer people are going to go to universities. Universities are going to have cash flow problems. And then universities are going to dip in their endowment, right? And then once they deplete their endowments, they're going to go for a Hail Mary pass and try to save the university by begging alumni to donate. But there's only so much alumni can donate. And so I do believe only 50 big universities will exist by the time I leave this great planet. All right. And I'm going to live for a long time. All right, give me 1 second, guys. All right, hold on a second. All right, next up, Shivansh wrote here, what is the fastest growing industry to invest nowadays? Yeah. I still think there's a lot of low-hanging fruit when it comes to the technology industry. And what you got to do is look at companies that have not been disrupted yet. You know, like what Uber has done for the taxi industry or Airbnb has done for the hotel industry. You know, find those traditional industries that have not yet been disrupted by technology. Yeah. And always make sure that you look at the younger generation. Because what the younger generation uses is Generation Next in terms of investment opportunities, right? And that's why I invested in Roblox, because my kids use it, that sort of thing. Yeah. All right. And that's why I'm wearing Yeezys, because my kids who don't have Yeezys, they told me about it. And my son Andrew listens to Kanye West as well. And we do it together and we work out. It's fun. Yeah. All right. Next up, hey Manas, how are you? Manas is one of my wonderful students in India. And Manas wrote, good morning, my dear mentor. Chris, please. Hope all is well. Really excited about the webcast. Thank you. And thanks for being here, too. Next up, Ikenna wrote, I'm a huge fan, Chris. Keep up the good work. Thank you, Ikenna. First time I've seen you on the webcast, and I hope you join us again. And thank you for your support. Appreciate it. Manas is saying, I want to ask you something. I'm giving a presentation in the U.S. Nanny Organization this month. What are the things I need to mention and how to hit a pile driver in this presentation? Thanks. Yeah. So when you present, what I would do is keep your slides simplistic. Try not to have more than 3 bullet points on any slides. Try to use images more so. Think Pinterest versus, I don't know, LinkedIn. Images works incredibly well. That's why Insta is a big success. Right? That's what I would say. I would also take my complete presentation course, or if you're in my MBA degree program, we do something much more elaborate as well. And that will help you out big time. Yeah. All right. Next up, Manas then said, Elon is letting Dogecoin go up higher than ever. What are your thoughts on that? What do you think about that? Yeah. Well, Dogecoin kind of started out as a joke. And the guy that created Dogecoin created it in 2013. And he sold out. He made 6 figures, whatever. And it's kind of become a manipulated joke. I have not done the research on it. If I were to do research on Dogecoin, I would try to understand what the supply limitations are. Because if too much supply is out there for any investment, like cash, which is trash, then we all know the value goes down a lot. And that's why Bitcoin's been a big success, partially. Because only 21 million Bitcoin will ever be created by the year 2140. You always want to look at supply for every investment class. And as my late grandfather used to say, Chrissy, buy land. They're not making it anymore. And that's what I've been investing in. Less so now, though. I'm kind of worried about markets being in a bubble right now. So I'm not buying new stuff right now. I'm a net seller, actually. All right, next up, we got Nikki. Nikki wrote, hey, Chris, hope all is well. Likewise. Question. Is it important to have a company registered to sell courses? Or can you just work off a website, Facebook group? Is there a VAT involved? You're probably based in England, right? Value-added tax, you wrote here. Other taxes, thank you, Kyle. Yeah. So the way it works is a couple things there. Whenever you start a company, and I'm going to get down my knees on this so you'll remember. Whenever you start a company, please register it. Please. Please. That was me on my knees praying. Please register it because when you become successful, people will come after you. And I want you to protect your family and yourself and your assets. So step 1, register. How do you register? Well, you can go to LegalZoom.com. And by the way, I'm not sponsored by anybody. I never will be. And that is one of the reasons why I'm sure, among others, that I don't have that many subscribers. I don't give a damn. I'll never ever sell out. And I get offers every day, tons of them. But go to LegalZoom.com and ask them how to set up a legal entity. It's a cheap way to get access to lawyers. So that's number 1. Number 2, in terms of charging taxes, etc., there's a lot of websites where you can teach online. And they'll take care of all the taxes and stuff, right? They sell the stuff for you. So, for example, there's Udemy.com, and they take care of all the taxes. And basically, 30 days after each month ends, I get the money I made. 30 days later, because you always account for returns. Now, I use Teachable.com for my website, and their payment engine, and they accept all payments globally. They take care of all the taxes and stuff. I don't get that. Yeah. All right. Next up, Manas wrote, thank you for answering my question. God bless you, and really glad to be part of the HEV family. Thank you. God bless your family forever and ever. Thanks for everything. Thank you. I appreciate that. God bless you way more, brother. Okay, next up, we got Melly622 is saying in China, they're even allowing you to have a 3rd child now. Yeah, because the population dipped last year, kind of like the state of California for the first time in history. Yeah. All right. Next up, Mike wrote, regarding your thoughts on wishing that the Federal Reserve raised interest rates from 2017 to 2020 to provide an anecdote for the falling economy in 2020, would you feel different if COVID had not occurred in hindsight? No, I still think they should have done it. I still think. The problem is, and I'm not going to get too political, but there are certain politicians that were pressuring the Federal Reserve, even though Fed is supposed to be independent, not to raise rates because politicians may or may not want to get reelected. Yeah. No, but you always so business is cyclical. Bull market, bust. rinse, lather, repeat. And these cycles can last 10 years, for example. And when times are great, you need to raise interest rates. Not a massive amount, but you need to raise them so that when times suck, what you can do to jumpstart the economy is cut rates. But if you don't raise rates when times are great, you'll have no ammunition left in the chamber to jumpstart the economy, so to speak. And the reason why that occurs, that there's not enough ammunition left, in awful analogy, but you know what I'm talking about, in the Federal Reserve canon, so to speak, is because government officials have become way too short-term focused, which was the topic of one of my discussions earlier today. Yeah. All right. Next up, Cuban media is saying, hey, Chris, do you think China IT giants can dominate in the market if Google will be split up? Yeah. And I think Google's gotten a bit of a hall pass by the U.S. government antitrust department over the past decade, because Google, so Sergey Brin, who's one of the co-founders of Google, he was born in Russia, and he understands the disgusting nature of communism and elimination of freedom of speech. He hates that. And so Sergey Brin, who lives here in the Bay Area, basically he decided, I think it was in January 2011, about 10 years ago, that because of a lack of freedom of speech, it didn't feel ethical for him to allow people to use Google in China. And so Google pulled out of the Chinese market in January 2011. And I'm embarrassed to say, I had my profit hat on back then in my hedge fund. I went long Baidu and short Google then, which is a wonderful pair trade. Sorry, I felt bad, but that's what I did. I wouldn't do that again in hindsight, whatever. But I think because of that, and because Google is, generally speaking, don't hate me for this, but generally speaking, a good corporate citizen, I think because of that, the U.S. government hasn't broken them up yet. But my gut is that the EU will basically start to rattle the antitrust cage and say, you got to break up Google, because Google owns the two biggest search engines in the world. Google, of course, and YouTube. And if you have too much dominance from one particular company, innovation, tends to die. So it will be broken up. It will be, I think. Same thing with Amazon. I think the reason the Trump administration did not go after Amazon to break it up into two companies, Amazon Web Services and Core Amazon, is because God bless Amazon and the delivery people mainly at Amazon, for keeping the economy afloat by delivering stuff during COVID. But it's coming. It's coming. And if you look at John D. Rockefeller, who basically owned the oil industry in America back, in the 18 and 1900s, his company was broken up. His company was Standard Oil. It was broken up into many different companies. Out of that came Chevron, ConocoPhillips, Esso, many others. And he was dominant in one country. But imagine John D. Rockefeller being dominant in the oil sector in almost every country. Google is a much bigger monopoly than Standard Oil ever was. And it's only a matter of time until it gets broken up. Yeah. Okay. But in terms of will that impact Chinese giants dominating the market, I don't think it's going to have a massive impact, really. And if any Chinese companies like Baidu get too powerful in America, I'm sure there's going to be certain political watch groups that will try to limit the use thereof. Kind of like what you saw last year with TikTok. Yeah. All right. Next up, and Andre was thank you, oligarchical. Thank you. And I couldn't say oligopoly earlier. Thank you for that, for correcting me. Thanks. Next up, we've got L Investiering Yud. I'll just call you L. L is saying, hey, Chris, greetings. I thought you're doing a play on the word invest. That's your last name. Apologize. So L Investiering Yud. I'll call you L. Thank you. Is saying, hello, Chris from Estonia. Have you heard of an Estonian crypto exchange called Change? Change. I have not. Sorry. I have not. Yeah. In terms of the crypto exchanges I use, the one I use the most is Coinbase, just because I have a hot wallet on Coinbase. Yeah. Okay, next up we have Noman Islam, and one of my clients at Manulife in Toronto, when I worked at Goldman, was named Noman Ali, great guy. So Noman Islam is saying, do well-known companies hesitate to hire candidates with no-name employers? I hate to say it depends because I hate the way lawyers talk, but it depends. It all depends, right? So every company has got to groom people that don't have work experience, right? And there's big corporate training programs at these big firms. So you got to start somewhere. So the big firms don't mind hiring people with no work experience because they're growing them. Yeah. Okay. Next up, David wrote, Chris, how can I get my hands on preferred shares of stocks? My understanding is that they have more power or voting rights and they can be converted. Yeah. So for those of you not familiar with preferred shares, the way that it works is when you invest in a company, if you lend them money or you buy bonds or debt, right, you have a senior claim on assets. Okay. Then comes preferred shareholders, right, which is like owning stock. You get preferential treatment. So if the company goes belly up, the debt holders get their money back first. They got a senior claim. Then preferred shareholders. Then the lowest of the low is common shareholders. And so whenever you and I buy stocks in the stock market, it's almost always common stock. Now, the way to get access to preferred shares is usually if the company is private and if you invested early, right? So a lot of venture capital firms, when they invest, they don't want to get too diluted. So they invest in preferred shares, which is dictated and documented on their term sheet, so to speak. Yeah. So the way to get preferred shares is if you invest through a venture capital firm, or if you know people that work at companies and you can invest privately, or you go to websites like, I think it was secondmarket.com, which is now owned by the NASDAQ. Yeah. Now, if you want to buy a big stake in a private company from another investor, then you first of all have to get blessed or approved, so to speak, by the board of directors. And the board of directors of private companies, they can control who buys stock when it's private. And they've got what's called a ROFR, R-O-F-R, which stands for right of first refusal. So when I worked in the venture capital industry, we had a very big position in Palantir, and we bought it from another investor. And so Peter Thiel and the board of Palantir, when it was private, they had the right of first refusal, but they approved it so that we could invest when I worked in VC. And that was when I was a partner in a fund with 3 people. Yeah. I don't own Palantir anymore, and I sold all of my private investments pretty much, yeah. As you all know, I'm kind of worried about investing right now because of inflation. Yeah. And because everyone's bullish. You got to be a contrarian. Next up, Akshay wrote, hey, Chris, I'm currently doing your complete cryptocurrency course. It's amazing so far. And then you gave me high fives. Thank you. I appreciate it. Thank you. I had fun making that. Yeah. And when I started making that course, I was really positive on cryptos, like a 7 out of 10. And by the time I finished the course, I was only a 3 out of 10. I do believe that there are a lot of great cryptocurrencies out there to invest in, but I believe there's more crap than good stuff out there. Yeah. All right. And I still own the same 4 cryptos I mentioned during that course, which I'll never sell, probably never, which include the following. And do your research, please. Don't rely on me. Bitcoin, Ethereum, Litecoin, and Ripple. Yeah. And the founder of Ripple lives just around the corner from here. Yeah. All right. Next up. Zorolina wrote, hey, Chris, I love what you're wearing today. Thank you. Appreciate it. Dark works on you very well. Thank you. Now, I think the pocket, not sure. Can you take it off and see without? Yeah. And I got rid of it. And the company that it's weird. They've got this brand thing that's it looks like I have a nosebleed or something, but that's just part of it on the branding. And then there's this pin that was on the collar as well. I took it off. Yeah. Yeah, thank you. I will lose this. Done. Thank you. It's fun playing grown up. All right. Next up, Noman wrote, how do your MBA students showcase their skills to manage consulting companies? Yeah. So I provide my students with a ton of arrows in their quiver, so to speak, and that's euphemism for a lot of different frameworks. And so I teach them how to interview and to use consulting-based interview templates when articulating how they would solve a business problem in a case study. So in addition to using the SWOT analysis, strengths, weaknesses, opportunities, and threats, I provide them with a number of other tools, like the Boston Consulting Group Matrix, BCG Matrix, and many other matrices as well. And speaking of BCG, that's where Benjamin Netanyahu He worked at BCG after MIT. Yeah. And BB, who they call him, it seems like every week forever there are articles saying that he's going to be pushed out of power, and he never does. He's kind of like Boris Yeltsin, right? Was in the old Russian Republic years ago. Right? He's just a survivor. Yeah. All right. Next up, Andre wrote, "Hi Chris, I'm new to investing. If you were new, would you learn about crypto trading, stock market, or other types of markets? My goal is to learn enough to make money in the short term." Yeah. So I would start with the stock market. And I would start by looking at companies that are very liquid, meaning they trade a lot, so that you can get in and out if need be. And what I would do is I would take my complete financial analyst course or my MBA degree program and just use the templates I provide you with to do your own investment research, because nobody is smarter than you. Don't take advice from anybody in terms of what stocks or investments to make. That's what I recommend. Yeah. All right. And then Andre wrote, "Hey, Chris, I started one course about stocks on Udemy. It's fantastic. Thank you for your efforts to do this." My pleasure. And thank you for being a customer as well. Thanks. Imagine that, a teacher treating the student like a customer. Yeah. Thank you. Next up, we got Briss, who wrote, "Hi, Chris. I know you're from Canada. Do you know if it's legal to do crowdfunding in Canada?" Yeah. I would talk to a lawyer up there. Yeah. McCarthy, Tetro, Tory, Blake's Castles, whatever it is. Talk to those law firms in Toronto and get their advice first. And whenever you raise money, whenever anybody raises money, doesn't matter what country you're in, don't ever do it without talking to a lawyer first. A lawyer has to create an investment offering memorandum, okay, for you. And this covers your ass as well, in case there's a problem with the investment. Yeah. All right. Next up, Tuning Nerd is saying, "Can someone protect their assets under statutes?" Yeah. Give me a little bit more color on that, please. A specific example, so I can humbly help out and answer that question properly. Thanks. Hey, Sonu, how are you? All right. Devendra is saying, "Hey, sir. Yesterday I bought your MBA course on Udemy. I came to know about you yesterday. Thank you." I appreciate that. Thanks for the support. Thank you. And then Nishchay is saying, "Hi, Chris. What are the best courses for medical students who want to be future entrepreneurs who have no idea about entrepreneurship and public speaking?" Yeah. So I'm biased. I don't teach based on theory. I teach based on real practical experience. So what you can do is, if you want, go to search for my name online to buy my courses on how to present. I have a presentation course, complete presentation course. And I also have another course called the Complete Business Plan course. So you can check out those courses, as with my MBA degree program, where I go into much more detail. All of my products always have a 30-day, 100% money-back guarantee. So you can take all my courses and get your money back within 29 days. And I never look at who asked for a refund. So don't feel like you owe it to me at all. Yeah. Thanks. Hey, Bob, how are you, man? All right, next up we got Naman, who wrote, "Hey, Chris, what factors should you choose when we network with people?" Yeah. So what I refer to in my free book you can get from my website, from my homepage, when it comes to networking, is find one or two things in common with somebody, right? And then reach out to them. Because people are more likely to take a meeting with you if they have a similar background, similar work experience. And I know this to be true because if you closed your eyes and you pictured yourself 20 years in the future, and you're 20 years more successful than you already are today, and if 20 years in the future, a younger version of yourself reaches out to you and asks for a meeting, would you take that meeting? Of course you would. Of course you would, yeah. So what I would do is I'd search for people that maybe went to the same school as you, maybe from the same hometown, maybe they're from the same organization as you, right? And so when you do your in-mail, which I talk about in my courses and my books, you do an advanced search for people that went to the same school as you and maybe they're from the same town. So an in-mail might go like this. And don't ever send emails when you want to network because nobody answers them. Because most of you don't open most of your emails. But all of you open all of your LinkedIn InMails. It's true. So you send an InMail. And in InMail, you write, Joanne. I'm going to make this up. Joanne, hope all is well. I'm also originally from Mississauga, which is where I'm from. And I also went to the Toronto French School, which is where I went. I didn't speak English in school till the 4th grade. Now, I'm based in the Bay Area as well. Please let me know if you have time for a quick Zoom call or a coffee. Thanks. Your future boss, Chris. No, thanks, Chris. You'll find that people will respond, right? More often than not. Okay. All right. Next up, Anurag said, Namaste, Chris, dear mentor. Namaste. Thank you. Hope you're doing well. Okay. Ivan said, hey, Chris, how would you invest $100,000 right now? Any business ideas around this amount? Many thanks. Yeah. So I would, first of all, take your time. Right? There's no FOMO or fear of missing out. Just take your time. And what I would do is I would diversify so that no more than 20% of the 100K, so 20 grand, is in stocks. No more than 20K is in real estate. No more than 20K is in bonds, etc. And within those tranches, 20,000 or 20%, same thing for stocks, I would make sure that you don't have more than 5% in any one particular stock or sector. And I think about diversification that way. And I teach about this in my complete personal finance course. And I go into much more detail with more tools or arrows in your quiver, tools in your toolbox in my MBA degree program. Yeah. Take your time. And if you don't have time to do research on stocks, then consider ETFs. And then Ben wrote, hey, Chris, great to see you. Likewise. And then he wrote here, what made you switch from Udemy to Teachable? Yeah, I didn't switch. So Udemy is a platform where I sell my courses. And I also have my own website's version of that called Teachable. Right? And I use Teachable as the engine. So if you go to learn.harounventures.com, that's stored on Teachable. Right? And so my MBA degree program is hundreds and hundreds of hours long, whatever. And Udemy, you can't put long courses on. Yeah. Yet. Okay, Prakash wrote here, hey, Chris, this is my first session and wow. I wonder how I missed all the earlier ones. Thank you for being here. I appreciate it. Thank you. Going forward, I'll be a regular participant every Thursday, and thank you for sharing your great knowledge. God bless. God bless you way, way more, and thank you for joining us. Thank you. I appreciate it. Thanks. It's fun. I still make mistakes, though. This is my 139th webcast, and I still make tons of mistakes, as you can clearly see. Yeah. But I look a bit more professional now. A bit. Yeah. All right. Next up, I've got Anurag, who wrote, Dear Chris, can you share your insights into Renaissance Technology? I learned that they had the highest returns over 30 years at 60%, better track record than Warren Buffett. Sure, I know a lot about this. Yeah. So Renaissance Technologies is a company that was founded by Jim Simmons. And Jim has a son out here that went to Berkeley, so they have an office here as well on the left west coast. And what Renaissance Technologies does is it's like a hedge fund or a mutual fund, except instead of people picking stocks, they have thousands of Linux servers running in parallel that pick stocks. And they kill it every year. It's amazing. And what Renaissance does is they have these programs set up so that parameters are fed into these software products, and out of these products come stocks to buy or short, which it does automatically. I'll give you an example. Let's say that it's raining a lot, right? It's a parameter, a weather API. It's raining a lot. If it's raining a lot, then people are less likely to go out for lunch at restaurants. Therefore, short restaurant stocks, for example. That's what they do. Yeah. Now, to invest there, you got to have at least 20 million. My old boss, Carson Levitt, who hired me at Citadel and Pequot, he was an investor. He used to share the slides with me, and I saw all the performance numbers and how they did. It was amazing. Unbelievable. Yeah. And not many companies have figured this out, artificial intelligence-based algorithms to trade. And there's some companies that compete with each other. There was something called the Goldman Alpha Fund. And I'll never forget this. But in August of 2007, all the crappiest stocks went up a lot, and all the best stocks went down a lot. And we were like, WTF? Why the face? And the reason why that happened was because Renaissance and Goldman had the same trades on, and they were unwinding it. And there was massive mean reversion. It was the weirdest month ever, August of 2007. I remember that well. Yeah. All right. All right. Next up, Elle wrote, hey, Chris, do I need to buy your MBA program in order to get the more up-to-date crypto investment Excel spreadsheet that I can get while taking your crypto course? Yeah. Yes. Yeah. The more updated version, the more updated of everything is in my MBA degree program. Yeah. And try it out. You can sign up. Go to my website, harounventures.com. And then, if you don't like it, get your money back within 30 days. Or sign up, get the crypto dashboard, the new one I made, and then get your money back. All right. Next up, Madav wrote, hi, sir. Chris, please. How are you? Okay, Charles. Charles is saying, heck of a speech on how you found love in what you do. Great show. Thank you. I appreciate it. Thank you. I failed over and over and over again, and that's why I have many successes. Where the hell is my Michael Jordan poster? Oh, here it is. And although this might seem like a clean, crisp, simplistic setup, it's a disaster on the floor. I have props everywhere. But Michael Jordan said this. I failed over and over again in my career, in my life, and that's why I succeed. All right, give me 1 second. I'm just going to take some of this for my voice. Hold on. Behind the scenes, that's what newscasters do, and rock singers too. It's called Voice 37. Yeah. All right, next up. Amaranth wrote, have a great day. Thank you, you too. Next up, Rafay. I used to work with a great guy named Rafay Faruqi at Goldman. And his cousin, Daniel, was my intern at Pequot. And then he went to HBS. All right. So Rafay wrote here, hey, Chris, can you please suggest any online brokers which you can invest in NASDAQ from Pakistan? I came across several apps, but they only offer CFDs, which are too risky. Thanks. Yeah. I don't. Here's what I would do. And as with all my answers, I make the answers generic enough to apply to everybody. What I would do is I would get a list of the biggest 5 banks in your country, and call all of them and ask them what the name of the brokerage company is that they work with so that you can buy stocks. And what you can also do if you want, but do research on this first, please, is you can use Ameritrade if you want to, and then set up a VPN. Okay, but please do research on it, see if it's even legal. And let me show you what I recommend trying out. So right here, this is a product called Think or Swim, okay? And it's made by TD Ameritrade. This is what I use. And the reason I love this is you can do live trading or paper money, okay? So let me enter my password. So I'm going to do just paper money here, okay? And I'm going to log in. And don't invest in options, puts or calls or anything, or even stocks without first thoroughly understanding how the whole process works. And so right here, this is simulated trading, right? Because I logged in a paper account on Think or Swim, which is owned by TD Ameritrade. And so what I can do here is I can trade options, right? Futures, Forex, all that stuff, right? So right here, I've got Coca-Cola ticker KO, and this is just for educational purposes. I've got here options. Okay, so for example, the June 11th, 2021 option for Coca-Cola right here, right? The calls. I've got a strike price right here of $55. It's in the money because it's shaded. Last trade was 81 cents. And you always buy it in lots of 100, just how options work. Yes, it sounds complicated, but you got to practice using this type of methodology first before you start investing in options. And I'll be teaching more about options later on, later this year in my MBA degree program. Okay, I'm so sorry, but we are out of time. I've got to ask now the question to see who's going to win. And there's a lot more questions, okay, there. And whatever, if I don't answer your questions, please copy them and paste them next week, and I promise to answer them every week for you. All right, now time to give away the MBA degree program. Here's how it works. I'm going to ask you all a question. And the first person to enter the answer, right, the very first person that I see in YouTube Live that answers it correctly, I'm buying time to think of what the question's going to be. Now, the very first person to answer correctly gets the $990 MBA degree product. Okay, you ready? Here we go. Okay, I got it. Good. All right. In this call, I talked about investment banking and IPOs. What is it called when an investment bank creates new shares in an IPO? Okay, what is the name? Right? Not insider selling of current shares. What is it called when new shares are created in an IPO? And whoever answers this correctly gets it. Tony 2 times is trying. That's not right. Tony, who lives in Toronto, he's from Montreal. His wife works at Blake's Castle. Primary. There we go. Roberto got it. Good. Yes, Roberto got it. It's called primary shares. You are correct, Roberto. You got it first. Yeah. And let me double check and see if anybody else got it before you. No, it was Roberto. Okay, great. Exactly. When a company goes public and they do an IPO or initial public offering, 2 classes of shares are offered. The first one is preferred shares, which means brand new shares that investment bankers create. And the investment banks will sell these shares for the company. And the use of proceeds from primary shares or new shares created is usually for the company to grow or whatever. They call it general corporate purposes. Secondary shares are when people that work at the company or the venture capital firms, the investors, they're allowed to sell their shares. So, Roberto, you're right. It is preferred shares. And so, Roberto, please send me a message. Email support@harounventures.com. What I'll do is I'll send you a coupon for free for my $990 MBA degree program. Congratulations. Now, if you subscribe to my YouTube vlog, I'll see you every day at 9 a.m. because that's when my vlogs drop. If not, God bless you. Have a wonderful weekend. And I'll see you next Thursday and every Thursday at 8 a.m. And in a few weeks, I'm going to be doing this webcast live from Rwanda in a small town called Magoo, as one of my amazing MBA students who graduated last year, Vital, and I are building schools there. So I will see. Oh, and within 3 hours, my wonderful staff, one of my employees actually, who I met on this weekly webcast, named John Klee from Rochester, New York. What John does within 3 hours of this call being completed is he takes all the questions everybody's asked and he puts them in the description field of this YouTube video. So you can click and get immediate access to all questions asked. So God bless you. Have a great weekend. I'll see you next Thursday and every single Thursday. Thanks again.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it. That's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.